If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
Morning, everybody. How are we doing? I've got the happy Pete Ward's in with me this morning. How are you?
Morning, Richie. How are we doing?
I am full of beans.
Yep.
I went to the gym for the first time in 2 months last night.
Oh, well done. Excellent. How was the cafe?
yeah, they do a great English breakfast there. No, went to spin class because it's been raining, obviously.
Yeah.
So decided to go back inside, not the paddle.
Nice. How'd you get on?
We haven't got you into paddle yet, have we?
Not yet. No, I'm trying my hand at golf at the moment, but I will. I'll give paddle a go. One of the two.
Golf's not exactly getting your heart rate up, is it?
You'd be surprised actually on the old on the range. Yeah.
What can you
going?
On the range?
Yeah.
The excitement.
Yeah.
It's not. So you're not even getting a walk then. That's just lazy.
That's just lazy. But there's other bits I do. You know, did a lot of circuits recently.
Right. It is the 22nd of July. The countdown's on. 2 days to Ibiza.
Oh yeah, who are you going there with?
I am off there with Mr. Stuart Holt, my good buddy Vatch. So the two of us were at Credit Suisse from 2007, I think.
Yeah.
And then a good old friend, Andy Erskine from Boston.
Oh, nice.
So
how long are you going there for?
We are 3 nights.
Crikey, you've not got 3 lights in your locker
We're
anymore,
staying
have you?
in Ushuaia. I don't have. I'll be lucky to go 2 nights in my walk-up.
We're going to have your decaf tea.
Did I tell you that story?
No.
So last time we went to one of these places, I think it was Marbella, and we had a big night on the Friday.
Yeah.
And the Saturday you go to a beach club, but you got to be at the beach club for about 1 p.m.
Okay.
Right? So 1 p.m. we get there, and one of the lads orders a round of beers. I ordered a pot of tea for one. So they've got a picture of me sitting on the sunbed with my cup of tea and a teapot and everything.
On.
Yeah.
Yeah.
So I'll find that.
That'd be great. That'd be fun.
So that's Thursday, but we don't get there till 10:30 p.m. And we're staying at the place where the party is.
Yeah.
So your hotel room basically walks out into the party.
Yeah. Well, I'll still be going at that time, I would have thought.
Well, the party does it finishes at midnight.
Right.
But it'll be going when we arrive, so that'll be
cool.
a quick start.
Yeah.
So, shall we have a look at what is coming up on today's show with all these jollies? Tuesday, 22nd of July, I've got Pete Ward through with me, but Angeline is going to come. And after she has done her great value add of posting the upgrades and downgrades on the chat, she's then going to come and do a quick baton change with myself to come and quiz you.
Nice.
Oh, she's going to go. She's not going to take any prisoners today. Then we've got Piers Buckworth's back. That's right. If you have seen Plug Power, my goodness, the boy has called an up 80%er in Plug Power. So we thought we'd invite him back. We got Tech Focus at 8:30. 9 a.m. Piers joining Ange for the opening bell. Then we've got Jolie in for Trader Tools at 10 past. And then a replay of Joe. German Joe is in the house.
Nice. Looks good. So that Plug Power then, that was an 80% returner.
He called it when
What
it
sort
was.
of time frames up?
Oh, it has been a good few weeks.
Yeah, that's pretty good.
But we're not happy with that. We want the next one now.
That's it.
We want the next one. I love that. And so producer Phil's told Angeline to use less messages. So she's written 2 messages to deliver that message. Good morning. How are you all? JC in the house. Funky Gibbon, Neil Brewster, Friar Tuck. Good morning to you all. Very nice of you all to say good morning. Away from the numbers, morning shipmates. Oh, are we moving on to shipmates now and away from Monkey Man's lost control of the pen? Come on, Monkey Man, get in there. Get some order. Now, talking about getting some order, you did a bit of ordering for us on Friday, didn't you?
I did indeed, yeah. Did you enjoy yourself?
I enjoyed the meeting the clients.
Yeah.
I didn't enjoy your participation in the day.
No, that's not very friendly. I won't be inviting you again.
I'm a client, you have to. So
I didn't work you that hard, to be fair. I was thinking about getting you asking all sorts of questions, answering all questions on the fly, doing a little speech. But yeah, just left you to it, really.
And so
Let you enjoy yourself.
Run us through run us through the location, because that roof terrace was unreal.
So yeah, we did a lunch for 10 clients, and that was in Knightsbridge, rooftop place called Clap, which I think is a restaurant that's come over from Dubai. Because one of my colleagues, Nojan, who works for the Dubai office, he said that he's often takes clients to that one there.
Yeah.
So it's kind of come over, and yeah, it was good. Wasn't it? Had a nice little roof terrace for a drink first, a nice casual lunch, and a
lot of rosé. We did the round robin, so everybody changed seats. So I started off speaking to a great couple of clients that I had met them both before, but I missed out on one of my friends that used to work at Credit Suisse.
Yeah.
So yeah, that was a shame.
Yeah, well, he had to get back as well, so he was in there for a short time.
Yeah.
He'd actually walked there from here, which was impressive.
But then I went up to the other end of the table and met a wonderful gentleman who I hope has tuned in this morning, that does the Ironmans.
Oh yeah.
I mean, I'd say 10 years older than me, and he's still doing Ironmans.
That's a serious event.
I mean, that puts your marathon to shame, doesn't it?
Well, yeah, and it completely bazookas your Battersea Park 5K.
Hey, it was a 10K, right?
Yeah, but you walked the other 5.
I include the 5K to get to Battersea Park.
That's it.
But yeah, what's happening with the marathons? Because you were a bit of a champ last year.
It was 2022, actually. Time flies, right?
Really?
Yeah. Yeah. So
You did a half marathon.
I did a couple of halves since then. Yeah.
Right.
Yeah.
You're half the man.
Doctor's advice of stop hammering your Achilles with long distance. So half's about where you want to be.
Any plans this summer?
Not as yet. No, my brother's trying to convince me to get into do the Great North Run. You ever done that one?
No, I watched it.
Yeah.
Very impressive. Steve Cram's always there, isn't he?
Yeah.
Right, let's have a look then. Do we have any overnight moves? Or there we go. Look at that. There's the detail that you want. That's the Japanese stock market called the Nikkei, down 20 basis points. To be fair to Phil, I gave him this. I asked him for this at about 17 minutes past 7.
Yeah. No, fair enough.
We will have this in full detail going forward. China up 57 basis points, as was Hong Kong. The UK 10-year we've got sitting now at 4.6%, and the US 10-year sitting at 4.38.
Yeah. And it'd be interesting to see with that 10-year and specifically the pound dollar, because we had a bit of news at 7 o'clock this morning, which was about the UK budget deficit. And that came out kind of considerably worse, I think, than what was expected. A deficit of 20.7 billion, showing that their basic net borrowing has increased.
Right, so let's get
quite
that
considerably.
Up
I think they were estimating it was going to be 15.6. So you've got, quite a higher reading, basically showing that more borrowing, et cetera, et cetera. And obviously Reeves has got this continual issue of, how to generate more funds without cutting the spending that they're planned to do, without raiding the taxations. And
Yeah.
I don't know. We'll have to see. But yeah, you could see yields change. You could see sterling come under pressure.
Let's have an up-to-date look at what is going on my watch list there. So we've got the pound down 14 basis points, 134.70. So in that range that it's been trading. And what else there this morning? FTSE closing above 9,000 for the first time yesterday. We're in the 9,000 club at last. But the US had a reversal in the evening. That last 90 minutes was not pretty. We traded 6,330 and it did not like it up there. So back down we went, closing at 6,306.
Yeah.
Some beautiful moves yesterday. Palantir down, Nvidia down. They've run out of steam, Pete Ward.
Wow. It's a brave man who thinks that. I mean, you think this because of your positioning. But yeah, I mean, it's interesting, isn't it? I mean, everyone sort of looks at the data and they say, July, they haven't had a down month in July for the last 10 years on the S&P.
What?
Yeah.
Really?
Yeah.
That's it's easy then. Why not just buy on the 1st of July and sell at the end
exactly,
of the month?
Well, until there is one, right? But it's I mean, there's things lurking out there in the shadows. There's talks of more letters from Trump going out on the 1st of August, tariffs, etc. I think Jamie Dimon from JP Morgan was on the other day, basically saying that the market is not fully respecting or fully anticipating the impact that the tariffs have actually had so far and could potentially continue to have. It's almost getting shrugged off a little bit now.
Oh, completely. Because the market never goes down. So all the algos, there's no headline that we've seen that has caused a sell-off to stay.
Not since April, no, nothing of note. And obviously all the turnaround stuff gives people more and more thought process that it's just positioning, it's just conjecture. But
so we're going to look at that and more in some overnight action.
Says the man who got.
Right, so we need to look at Scott Bessent. Right, because Bessent has made a play overnight. He was interviewed on CNBC yesterday. And if we think that this whole Jerome Powell thing is just going to go away, it is not. They are gunning for him. And Bessent has come out in the CNBC interview and called for a review. Not just a review of the Federal Reserve refurbishment of their
Yeah.
HQ,
Yeah.
which he is calling for, but a review of the whole performance of the Fed, because he says if anybody keeps on getting things wrong, then there should be a review, just like your one at work.
Indeed. Yeah. Saying it needs an exhaustive internal review of non-monetary policy operations, and criticised the Fed quite heavily. So he's basically taking a bit more of an assertive stance and putting more pressure on Powell to try and maybe unearth something that's...
Well, they're threatening him. It's an absolute blatant threat in Fed week to get him to cut, isn't it?
Yeah. Well, he's speaking today at 1:30, Powell. So, but I mean, so far it's all just been, it's just been a bit of gameplay, hasn't it, from both sides?
Well, I decided to start my review of Pete Ward and his performance at work this morning.
How did you get on?
So I have been asking your staff to describe you in 3 words.
Okay.
If you win a prize if you guess what any of those are. You get 1 word and I'll tell you if that was included.
Inspiring.
That wasn't in there. I'll give you 1 more chance.
I don't know. What have you got? What have you got for me?
Kind,
Right. Okay. Interesting.
caring,
Who's told you this sort of stuff?
and hilarious. Genuinely. That
did
was the 3 words I
Who
was
did you
given.
ask?
Well, clearly, I don't know, our bonus is coming up or
Yeah.
something. Because
Wow. Nice.
kind, caring, and hilarious. You're not, I mean, that is not a boss. A boss isn't meant to be thought of like that.
No, we don't boss people here. We're coach, friends.
Yes, you're
Leaders.
the coach.
That's it.
Coach Ward.
Yeah. Put me in the game, coach.
So there we go. So Scott Besson is doing this review. He's accusing the Fed of so many mistakes that it's time to review it. But also they're having a look at the refurbishment of Federal Reserve and what is it called when it keeps on expanding? What's the word? Not crawling.
Growth.
Am I? No, when it was so the refurb was meant to be this big, and creep.
Yeah.
Yeah, something creep.
Something you know all about. As we saw last Friday night, when you failed miserably.
Drop the ball. Well, no. Still don't take.
I'm just glad that I bet against you.
Disgraceful. Then go on.
What? Tell the story. Well, yeah, we were outside a bar, and basically there'd been a wedding on the first floor of the bar, which
An
was
Australian
an
wedding.
Australian wedding, yeah. So all the Aussies had come over, and we got chatting to a few of the guests outside.
Mum, go and make a cup of tea if you're watching.
And Richie made a beeline for quite an attractive Australian guest.
6 foot.
Yeah, was working his magic, doing his best, and one of the client's friends was talking to me, saying, "Oh, I think that he's.
I think they'll end up married.
I think they'll end up married. I think this is love." And I said, "I bet you 5 to 1 that this is going nowhere." And he was like, "No, it's a done deal. It's a done deal." And then made the bet and
5 to 1 odds.
walked away with 100 quid because she failed.
So Pete and I were leaving, I don't know, about 9:30, something like that, because his wife kept on giving him a hassle for not being home yet.
I'm in demand, you see.
As we were turning around to leave and getting the rucksack on, the client just handed Pete 100 quid. And I'm like, why is he giving you 100 quid? Did we overspend on the budget or something?
It was a client's friend. That's brilliant.
Yeah, that's right. Yeah,
Fair play to him for paying up though. But yeah, he was hell bent that you were the man for the job, and I just said no. This guy can't close a book.
Talking about books, well, yesterday I decided I've had enough. I have had enough. I am going short Coinbase and Palantir. So you'll see there I went short 30 shares of Coinbase at 427 and short 80 Palantir at 154.
Okay.
So
Interesting one on Palantir. I was having a good chat with a client of mine who's a big believer, and he said last week that there had been a lot of noise about August 150 puts like a particularly large seller of 150 puts, basically putting a floor in it up until their results, I believe, which is between now and that expiry in August.
Yeah,
we're having a good old chat about whether or not that was just one big move or whether it was one person's positioning. But when you looked at the open interest, it was huge, and it's quite interesting. Like when you look at stuff like that, if you are quite into the options world and subscribe to different sort of things that flag large volumes, that flagged as being something that
there's a lot of information in options flow.
Indeed, yeah.
Where's the stop?
That's basically doesn't mean that 150 is the floor for the time being, but it's certainly the range that someone's willing to stake. I think it was $100 million position.
Oh,
where's the stop?
Yeah, that's decent in options.
Yeah.
Or the underlying.
In the underlying, if assigned. So I think they were looking to probably take $7 or $8 million in premium.
Okay.
It remains above 150.
Yeah. Decent.
Yeah.
Mission Creep, that was it, Shrimp Fred. Thank you very much, Mission Creep. That was the winner. And yeah, so that was, but I did buy, so I'm short Palantir and Coinbase, but I am long equal weight S&P against them. So it's not just a naked short trade, it is long equal weight S&P. And I think it's time to look at this equal weight S&P yet again.
So what do you mean by that, sorry, with the equal weight?
Yeah, very good question. The equal weight S&P means you take out the concentration out of the S&P 500, i.e. every stock has between 0.5 and 2% weighting rather than, sorry, that can't be right, not.
You mean they're all equal weighted as opposed to having an index weighting?
Yeah, 0.2 to 0.8%, I think it is. Or even smaller. But instead of any, you do not get that 38% concentration of the top 7 stocks.
Ah, right, okay.
So therefore, this represents the breadth a lot more. So what I'm doing is looking for a widening of the breadth rather than just buying S&P. Which relies greatly on the big 7.
So your view here is that at the moment momentum's to the upside and the market probably continues to grind a little higher, but you think that those specific stocks have topped out and they do a bit of a pullback.
Yeah, you've got 2 options. Either the highest beta stocks come down more than this thing, or you're exactly right, as you just said. Because last night in my spin class, I realized that Nvidia is just my heart rate. That's all it is. I keep quite a watch on my heart rate as I'm going, because I tend to get into it. Some great music in this spin class, and lots of Australians as well. And we so think of Nvidia share price like this, right? When it's down at 83. When your heart rate's down at 83 to 95, and you're in a class, it's going one way, right?
Yeah.
When it's up in the 130s, it's like, well, depends. I can take this next one easy. I can relax a little bit. But when you are working hard,
and you're near 170, 180,
174 I hit last night. Then that it's only going one way.
Well, that's it. And you got, 220 minus your age, so you're probably well above your max there already.
Well, no, 220 minus my age is exactly 175. You're right. I like your maths.
Yeah.
First time I've seen you come up with some mental arithmetic. So that is the way I'm playing Nvidia, is that it is, yes, I might be able to creep into 178, 180.
Yeah.
But it ain't staying there for long.
Okay, interesting.
And I think the sheer size of Nvidia has the same maximum range as my heart rate. I don't think it can go over 4.5 trillion.
Interesting. But if it does, then you'll pass out.
Yeah, exactly. Yeah. Then I'm going to have a heart attack. Yeah, spot on.
Which is it's about the right age for a Scotsman.
Oh, thanks, mate. Yeah, average life expectancy.
Really going in on you this morning.
Right, so let's look at the front page of the business. There it is. FTSE 100 closes above 9,000 for the first time.
Woohoo!
We've got wise. All that is wise is not is happiness and stability, because there is an argument between the two original
Creators.
Over this two-tier share structure. So if you're in wise, worth having a look at that. Oxford Nanopore shares rally. Now that is one of Nick Feingold's top calls. They had a huge move higher yesterday, so well done, Feingold. And then we've got various smaller stories there.
Yeah. One of the stories this morning, actually, which came out, which you may have on screen or not, is about Centrica.
I haven't seen that one.
They're basically come out and said that they're putting to buy in 15% for the Sizewell C nuclear project. The one that the UK government committed 14 billion to.
Yeah.
So the UK government owns 44% of it. There's a French firm that owns a bit of it, maybe EDF. And now Centrica have come in for 15%. So showing, I guess, the UK and other companies' commitment to nuclear and, that sort of growth area. So we'll watch those on the open this morning.
Was that expected, or was it just...
I don't know, I just saw it come across the headlines this morning.
We've got the headlines up there.
There you go.
So Sizewell, it sounds like one of your diet fads.
Yeah, size better. Sizewell C, it's, I want to say it's Ipswich, Suffolk.
Right.
Yeah, I think.
Good knowledge. But this
partners up with EDF.
Does this feed more into the whole nuclear and uranium story as a whole?
Yeah.
Yeah, we like that. Angie's long her uranium ETF now.
Yeah. I mean, there's a lot of love behind those. Whether that's Cameco or Uranium Trust, or there's also all those different ones, Nucleus, NuScale, etc. We looked at those in relation to AI as well, and the powering of the data centers. But yeah, so that's interesting in the UK. And then aside from that, you've had a couple of other bits and pieces. Marston's, the pub group. So they put their update out this morning. Read fairly well, to be honest. Good like-for-like sales. 1,300 pubs. They're doing some kind of refurb work, doing some work on their order and pay scenario where you literally just do it straight from the app. But they seem to be getting a boost. And then on the sort of construction infrastructure side, Kia Group as well have had their numbers this morning. Again, they read okay. So we'll see what the market's calling them. I think we've got opening calls here.
We don't go into that yet, Pete. We're having far too much excitement for...
some actual finance before the market opens?
Yeah, there was 757.
I don't know who you're used to interviewing on here, but I'm here to do some cold hard finance, son.
Yeah, fair play, actually. Yeah, Rory's too busy.
About your bloody holiday.
Right, last thing we're going to look at on the newspaper is in the Financial Times. This is a really interesting article, actually. Premier Inn should loosen up a little bit as it expands. So that is Whitbread, and this is a really nice article on the whole business of Whitbread. If you, like our good friend Jamie, are interested and you invest in Whitbread, this runs you through the exact business model and goes through...
They've got Costa as well, right?
No, they spun off Costa.
Did they?
And this is when the new CEO came in.
Aha. So who's got Costa?
It's a pure play hotel, and they've got the pubs still and the restaurants.
Yeah.
But
Premier Inn, that's the Lenny Henry adverts, right?
Exactly, yeah. That's how good an advert can be. The fact that you remember that 10 years later.
I was watching him last night on that programme about sharks. You watch that?
Didn't know he was still on TV.
Yeah, well, they've got a load of sort of, I don't want to be harsh, but maybe not A-list celebs, and stuck them out in the Bahamas to swim with sharks, to learn to dive with sharks.
So,
it wasn't the best programme in the world.
I thought your missus made you watch Love Island. Where did the sharks come from?
It's a new version.
He is an expert on Love Island.
You get sent off Love Island, you get chucked in with the sharks. That would be a good show.
Well, it's usually you getting voted out, isn't it? Right then, okay, it's 7:56.5. You can now go on to your...
Oh, thanks.
Opening indications.
So opening indications. Let's have a look here. Let's look at the big ones first.
Centric up 1% on that Sizewell story.
Yeah. Then you've got Legal and General down 1%, cut to underperform. RBC cut to 220 from 245. They've been strong though, Legal and General, ever since the tariffs down at 210, back to 250, 260. So
Yeah.
I'm surprised at that. And then we've got AstraZeneca plans to invest $50 billion into a US project. Compass CPG up 5% indicated. Q3 raised guidance and to buy Vermaat for enterprise value of 1.5 billion. And then into the 250, you've got Kia Group mentioned earlier, trading in line, strong operational execution, and appointed a new CEO, a chap called Stuart Togwell. And then aside from that, you've got Pennon raised to an overweight, and Greencore Q3 revenues update ahead of profit estimates. They're estimated to be up 3%.
Good stuff. And then we've got Angeline with her upgrades and downgrades. Stellantis, Deutsche Bank cuts target price to 8 from 9 euros. Eon, don't think anybody cares about. And SSE. Wow, that is the biggest one of the morning. Come on, Ange. Let's get that one on its own line. Barclays are talking up the Scots.
SSE, that's your first ever investment?
Correct.
And from your hometown of Perth.
That was, my father gave me SSE on my 16th birthday, my first ever share certificate with my own name on it.
Yeah. So, we've had this, I think, conversation, because I had some as well as a kid from my dad.
Right.
And I sold them when I went travelling.
The SSE?
Yeah.
No way.
To fund the trip.
Well,
to power the trip, if you will.
That's great. But of course, back in my day, they were Scottish Hydroelectric.
Yes.
That's the difference in our,
well, there we go.
in our ages. But that is, I have not seen a target price in the 25s before. Oh, they had a big day yesterday. Wow, I hadn't actually seen that.
Yeah. And what else we've got? We've got Greggs. They've been
Let's
cut.
just focus on this. Look at the buyers of this stock before it was upgraded. That's an interesting one. It's they had great vision and foresight, didn't they? That this, my goodness me, this stock has a real buyer in it. That's the 3-day chart, and this stock's gone from 1850 up to 1930.
It's a nice move. What's the tip rank say on that?
Let's go to tip ranks.
Strong buy.
Is this the highest target price on the street? Yes, of course it is. Right, so we got Goldman's at 22.67 offering you 10%. And then JP Morgan now offering you nearly 20, well, it is 20%, more than 20%. Right, we're coming up to the bell, so we're going to go into the opening bell. Do you want to get your bell out, Pete Ward?
Where is it? Oh, here we go.
Ring that bell, go on.
No.
Let's see how strong FSE.
Oh, I've broken it.
How have you, man?
I manhandled it. There's a sign. There's a sign to.
We did.
The market. The bell's
Can you check
broken.
iron ore and see what iron ore was overnight? Because we forgot to look at that one. But Anglo American up 90 basis points now. And BATS, I cut my terrible short in BATS yesterday because that was just shocking trade. On the downside, with the FTSE futures down 15 basis points, we've got Barclays dropping, Lloyds, and NatWest. So the UK financials are lower.
Yeah, and we've got no price actually in iron ore. Hasn't come on. But yeah, we've got high grade coppers down a little bit, lead down a little bit, gold off a little bit. No massive movers there. Nat gas EU's down 5%. But yeah, looking at the board in terms of the leaders and laggers, you've got Compass up 8 after being called up 5. Centrica up 5.36%.
What direction was Compass, sorry?
Up. Very nice. North. Which isn't up, but a lot of people think it is.
Like 8%.
Yeah.
North isn't up.
North isn't up, no. Common misconception.
Oh, it's just because of the way that the
It's people like you say, oh well, you're cycling from Manchester to London. That'll be easy because it's downhill. No, you're an idiot. You're actually an idiot.
Have you ever cycled from Manchester to London?
No, but my friend did it the other day actually. Something like 280 kilometres.
Wow.
Savage amount of time in the saddle. Yeah.
Yeah.
Congrats to him. However,
It's not exactly John O'Groats to Land's End, is it?
well, no, but it's in a day.
Okay.
So it's pretty severe.
Right.
Have you done John O'Groats to Land's End?
You're right.
Exactly. So,
Maybe a bowl of oats.
But yeah, looking at the board then, other than Compass and Centrica, Glencore, Rio, SSE, Entain, Anglos.
Don't forget
all up.
Vodafone, sir.
Vodafone up a whopping 0.37%.
Yeah, but what level?
83.28. Crikey.
Yeah,
Well played.
up there. Four numbers
Still
in a
short
couple
of
of days.
62 puts, 64 puts.
76 now.
I read
Shorts
it.
of 76
Lovely.
puts, which might not look great on Thursday. Right.
Yeah, let's see. But yeah, okay.
Glencore up again. God, that one is has had 2 days. I wonder, Angeline, have you seen if there's an upgrade out in Glencore? Because that is the way it's moving. I'm still not getting my feet on Rios and BHP for some reason. Let's go to the miners and see how they're all doing. Rio Tinto up 1%. And Glencore's really a standout there, up 2.6. BHP up 83 basis points, and Antofagasta, the underperformer of the day, as it should be, because copper's not doing anything. And iron ore was up yet again last night. So iron ore, let's just have a look at the way that this has been trading over the last few days. This is why I am extremely long Rios at the moment, because Rios is your iron ore play, along with Kumba iron ore, along with Anglos. Look at the way that this has been trading over the last few weeks. I like that more than I like copper.
What's driving that, do you think?
Don't know. No idea.
Nothing behind it. Momentum.
It has had a bad time.
Yeah.
Right. As Rio's had as well.
Sure.
So we're only back to where we were in February. But generally, the seasonality of this thing does. But look at that rise. You've not seen anything like that in the Rio share price
yet.
So where are we? That's back to February. Let's have a look at Rio's back to February, and you'll see there is a difference. There we go.
Yeah.
So iron ore accounts for 72% of this company's revenues, and iron ore is back to the February level. That would take us back to £50, and that's where I could see Rio's, at least to 48. And that's why I'm playing that one just there.
Okay. Interesting.
Right.
So, looking at the 250, some of the stocks we mentioned before, we've got the top leaders there. We've got Mighty and Greencore. So Greencore had an update there. You're up 6.6%. You've also got Fraser's Group going well, 2% up at 688. There was a buy in the Telegraph for them overnight.
Nice.
They had numbers last week, which actually missed a bit, came down to about £6, but rallied immediately off that level back up towards 7. And then at the bottom end of the 250, you've got Trainline and Kia Group. So Kia Group, we mentioned earlier with their numbers, obviously market wanted more. They're down 3.8%.
Going into Europe there, we've got E.ON on that downgrade, down 1.3%. ASML, weakness again. That's I'm holding those, and that is not pretty.
Yeah, I've got those in the SIP, and they're just doing nothing.
I think I'm going to go bigger there. I'm going to buy the same amount again. So another 200 at 616.70 for the ASML. Remembering that I am short Palantir, short Nvidia calls, and short Coinbase. So
Where's the
playing the underperformer against the outperformers. Autos, yet again. Where's our Renault? Is our Renault below 33.50 yet?
Is that one you've been chatting about quite a lot?
I don't see what they can do. if you've got the Chinese coming in to give you serious competition, and generally your cars aren't thought of as particularly special. Sorry to anybody that drives a Renault out there.
Yeah.
But
No, it's true. They haven't done much for a while.
not since Thierry Henry.
Yeah. True. Yeah. No,
Power of marketing.
No, but you look at some of the others. Look at some of the other ones. You look at Peugeot and a few others. They've come out with quite snazzy cars. But yeah, I'm in a Subaru at the moment. It's a blast from the past. Bit of Japanese muscle.
Bit of Colin McRae.
Yeah. I wish it's not. Sadly, it's an EV, but it's quite fun.
Why? What's wrong with your car?
It got busted up big time. My own doing. Big scratch. Like
Whoa.
Into the bodywork. It's really bad.
How?
Reversing out and caught an edge, and it just like lacerated the side of the car.
An edge of what?
The back of like a curtain cider pickup type thing with a metal thing hanging out.
Another car?
Yeah.
Did you leave a note?
Yeah. It's all sorted. Don't worry. But
So, what were the kids like?
no kids, just me and my friend.
Just you and your friend,
Yeah.
and you reversed into another car.
Basically, yeah. Small brain failure on my part.
Did you?
It was a mess, but it's being fixed. That's the
Do you
main
need
thing.
to go back and do your test again?
No. Accidents happen, Rich.
Usually, there's another party involved.
Look, just don't worry about it. All right, it's getting sorted.
Right, enjoy that Subaru. So, yeah, we're not really seeing much. Renault there, still same price, but Stellantis yesterday. Remember that price target this morning was €8. Well, they're there. They're there, right there at 798. And you can see the stock came off yesterday. Where's our Monday? Oh, it actually rallied in the afternoon. Yeah, it rallied back to, it's unchanged to where it was on Friday before they had those numbers. So is Stellantis finding a bit of support there? Going to the UK, we've now got Rio's up 1.1. We've got Compass up 5. We've got Centrica up 3.7 on that story that you delivered. You heard it here first.
That's it. It's going well.
Have we got a move on SSE? Not doing anything on a big upgrade.
Up 0.5%, 1940 spot 5 at 41 spot 5.
I guess that continues on from a big move yesterday.
Yeah, and yeah, as that chart showed, you've gone from 1850 up to here in 3 days.
Can SSE hold these gains? Because do you think that's a breakout? I haven't checked these out with regards to how they are on the chart. That's handy, isn't it? Not quite, but it is up to where it was back in October. That was a real round trip, wasn't it? So where do we see it going? Ooh.
Almost.
I think call Axel back from his holiday. We need some analysis on that.
Well, I think you go 2000 and stick some maybe a buy on stop, tight stop with it. If it goes through, get pinged, maybe gets a pop to 2250.
Just to put it into perspective, JP Morgan are calling it for it going up here within 12 months. So up in this range, that's punchy.
The high
Scott,
erection high,
20%
simply
more.
a high, which is higher.
Yeah. Well, 24%
Yeah.
from here. I'm not sure. Okay. What else? London miners are the FTSE 100. Kieran McKenzie saying after China started work on the world's largest dam in Tibet. Victoria Scholar's back.
Okay.
See, good morning to Victoria Scholar if you're watching.
The lady that was always abroad.
No, she used to work here. She was in this studio.
There was someone that was always abroad that was always messaging you. There.
No, that's Kate Murphy.
There we go.
Kate Murphy, one of the viewers.
Yeah. Apologies.
Victoria Scholar started off on my intern scheme at Credit Suisse.
Right.
And then she thought, I'm not having any of this banking lark.
Yeah.
I'll go into presenting instead.
Aha!
Got a job here.
Yeah.
And then is now doing really well. She's on, this morning. Vanessa. She's on Vanessa.
Okay.
This morning.
Yeah.
I dare say, I would imagine the BBC. But then just had a baby 9 months ago. She must be back. So welcome back, Victoria.
Welcome back.
Right, it is now 8:12. Pete Ward, we've had enough of you.
Okay.
Sorry, no, I've had enough of you. Angeline's going to come in, but there is a chart to guess first.
Oh, nice. I like this game.
Let's do this together today. And Pete Ward, guys, can you leave our microphones open? We're going to turn this into a live challenge rather than have the music. Is that possible? Yeah? Right, so we're all going to play this together today. Are we ready? So, it is, what country are we in? Waiting for the country. Turn the microphone on. Still waiting for the country.
For me?
No, I don't think that. They don't like turning the microphone on today.
Right.
Right, let's guess the commodity. Right, what do we think that commodity is? It's dropped down to, is that 41? 411. So it topped out at 520 and then dropped down to 411. What commodity is that? It's not nickel.
520 down to 411. It's not iron ore.
Is it one of the gases?
It's not a gas.
Softs.
411.
No. Corn?
Oh, Pete Ward going corn. He sounds like he's...
Maybe.
Oh, has he got it?
I think it trades around 400-ish.
Steve Davies saying lead.
Lead. No.
Led you down the wrong path there.
Lead, I think, is more high priced. It's nearer the thousands.
Right, let's check corn for you and see if Pete Ward has it and Gavin Ackers. And you're absolutely right. Well done, you two.
There we go.
Good effort.
Gonna have my cornflakes now.
Very good. Very
Get a ball
great.
passed to me.
Bit of a frosty reception from you.
Nice. Yeah. Where is Angela with my breakfast?
Brought us coffees this morning.
She brought you coffee.
Right, that's us for the morning then. Thank you very much. And Angeline coming in to quiz. And then I'm going to be back in about 30 minutes with Piers Buckworth, who is currently trying to call me to get in because he hasn't been let in from security. I don't think I would let Piers in if I was the security officer either.
Well, I have to give him another 80% tip.
Yeah.
Stock tip, that is.
Go on, plug.
Yeah.
That I didn't buy a single share of.
Oh, come on.
Sure he's
You've
about
got to
to.
endorse these sort of things.
Yeah.
Even a little bit.
Right. We'll be back in 2 minutes with Angeline.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, go. Hey guys, where are you going? You're not going to get better than cash returns.
me the next shiny new thing. Bring me the next shiny new thing.
Hello, trader friends. Welcome back. Pete, you know why Rich is on the spin, don't you? You know the real reason.
Because he's packed on about 10 kilos.
Guess again.
Yeah.
Guess again.
Why? Problem somebody likes at the gym?
Closer. You're getting hot.
Oh,
You're
really?
getting hot. Just don't kill me, Rich. He's got a hot date.
Oh, really? What, at the spin class?
No, but I
He's
think
got one coming
it's
up.
today coming up.
Wowzers.
Yeah. Holding him back now from coming in, going, "Whoa, don't reveal that." Suddenly he's like going there.
He's had a few hot dates recently, but not many of them have actually showed up. I keep saying to him, "Is it do you reckon they've Googled you and seen your TikToks?"
Or the Instagram, or his constant market.
Yeah, or maybe his
rounds,
dating show stuff back in the day.
Speaking of which, we've been talking, Rich and I'm sure you've seen many of his TikToks as well, talking a lot about Alphabet and Intel and Tesla as well. I know loads of you trade Tesla.
That's right. So yeah, we've got Tesla coming up this week. We've got a little countdown on our thing, 1 day, 21 hours and 46 minutes until they come out Thursday after the bell. But yeah, lots of expectation around what's going to happen with those numbers, with sort of declining car sale numbers recently, but then also a look ahead to what they're doing with their storage capabilities, power storage and whatnot, and then obviously the robo-taxis. So a lot to go at.
Yeah, let's back this up for our trader friends to have a look at, because I crunched this for you while I was waiting for you and Rich. As Wardy said, the robo-taxi thing will be a big thing to watch out for. However, I think that perhaps we could see further disappointment for the stock because you saw those videos, didn't you, of the near misses with the robo-taxi technology.
Yeah.
Also, disruptions in terms of productions. We're hearing about lots of refreshes because the Model X, the Model Y as well, they've been trying to churn and get numbers up and in the last year or so, cut prices to get those numbers up.
Yeah.
They haven't paid enough attention to refreshing the model. So we're waiting on details on the Model Y refresh as well. Lots of anticipation. I think this is going to fall flat. You heard me talk about this yesterday. Everyone who follows Tesla like a cult, so the retail investors, they want to know more about the humanoid, right?
Yeah.
And I just think that they are at some point going to update investors, but not until maybe year 3 or 4 of Trump, right? Not so much now. So there could be quite a bit of disappointment in store for Tesla.
It's going to be tricky. I mean, there's been not only all the bits and pieces you mentioned there about the actual stock itself and the output and whatnot, but also just the back and forth with Trump and the whole the whole fallout and with the way that we saw that the stock was so vulnerable to that sort of stuff going on. All of a sudden you're trading quite nicely, 330, 340, comes down to 280, 290 on the back of effectively a fallout. And yeah, like everyone I always speak to about with Tesla, it's so heavily centered around Musk.
Yeah. And the hype of Musk.
Yeah, and if there was ever anything to happen there, does all the genius of the whole thing disappear? How much valuation's put into that?
Yeah.
So yeah, we'll see. But yeah, people that love it, they just can't see it going.
Yeah.
They see it going 5 times where we're at.
Yeah. So this is the thing, trader friends. So I've put that at the bottom. I'm going to try and zoom in for you. The analyst consensus there. Average price target $305. The range 115 to 500. Very, very wide there. So be careful if you're trading this. Also, just taking a look, if you come off my chart, my slide right now, let's get up the share price for you. Here we are, Tesla. This will be one we're watching at the all sessions open, because yesterday it had another bit of a lift and then came off. rapidly after that. Let's have a look at this is weekend for some reason. Have your clients told you this recently, Wardy, that 2 weeks ago, no matter where I log in to on my IG platform, and I always have all sessions, never the weekend, it seems to just default to the weekend. Have you
really?
heard this from your clients?
I haven't actually, no.
Interesting.
What, and that's during the normal week?
Yeah.
Oh, okay.
Yeah, but it just started 2 weeks ago. Trader friends, any of this happening to you, let me know, because that's, I need to go and speak to the DevOps people.
Yeah, speak to the dev, speak to the desk as well.
Yeah.
But I know, on Tesla, we're doing a bit of an opportunity for the numbers as of midnight or 1 minute past midnight this morning up until the Thursday close. We're doing spread free on spread bets for Tesla up to 200k notional.
Yeah.
So it's quite exciting.
It's very exciting. We had Elliot, drum rolling that special feature.
Oh, what the daily Tesla option? Yeah, awesome. Yeah, I mean they've done some great work recently over there. They've got the loads more options on not just Tesla but lots of equity options on other stocks, dailies, weeklies, and then obviously on our desk we do offer nearly all of the ones in the S&P 500 over the phone, which a lot of clients don't realise. They think, oh, it's just what you see is what you get. But actually, we offer way more. And all the ones you do see, we offer a lot further out calendars as well.
Yeah, just call in, people. I'll send you Wardy's number.
That's it.
Pelican Mo, good morning to you. Big earnings means popcorn, 9 p.m. this week. Exactly. And it is huge for you tech enthusiasts out there because we kick off the mega caps this week. Very excited. You know I love earnings. Gavin Ackers, good morning to you as well. And Julian Musto, do stay here because you missed Jolie last week and she is on with me at 9:10. We'll look at Tesla, Intel and Alphabet again. So that we can give you options strategies as well to enable you to trade that whichever way you want. Away from the numbers, Neil, well done you. Did Neil get corn first or did you get corn first?
He may have got it first, actually.
Gavin, actually. Gavin also hit the nail on the head, corn there. Well done you. Right, so that is Tesla. Let's have a look at Intel too, because Intel is a huge one. And I think Intel might have issues as well. It's been really, really challenged by the AI. It's been criticized as being not aggressive enough in the AI space. It's had weak guidance, as well. And it's struggling in terms of the foundry business, still posting ongoing losses. Due to these constraints. You got a lot of clients trading Intel?
Yeah, well, I've got one particular client who's been trying to follow it for a while and looking for an in because he does think that there's that sort of opportunity for a catch-up amongst its peers with more spending in the AI space. But yeah, no, typically see more in some of the other names. But yeah, Intel, they're Thursday as well, right? As well as Tesla. I think Alphabet on Wednesday, I think.
Yeah, I think Intel might be tomorrow, yeah, we've got.
I've got the full graphic here of when's.
Have you got the earnings
Intel's
whispers
Thursday.
chart?
Intel's Thursday as well.
Yeah. So the interesting thing about this as well is he's got a very interesting name, Lip Bhutan, and he is the new CEO. He's a veteran in tech investing. And that space. And so a lot of people will be looking to Lip Bhutan as well to transform and turn around Intel's fortunes. He's rather new though there. So any comments on, what the strategies are to power growth will be interesting. Since we're in the chip space, I think you'll be pleased. I'm going to try and bring this up for you because you're going to feel vindicated. You're going to feel vindicated. I heard your discussion with Richie Rich about Nvidia.
Oh yeah.
Which I'm still adding to for my pension.
Okay. So you're going. You two are against each other.
Yeah. So I'm technically on your side. So he says, his heartbeat, right? He's not sure it can sustain. But I'm looking at this from a longer term, trajectory, Trader friends.
Yeah.
And I've looked at numbers.
Yeah, and?
Because I love a chart.
Yeah. What's it showing you?
Are you ready? Are you ready, people? Right, I'm going to put it on my screen for you. So, taking a look at, let's show Audi.
Okay.
Yeah, because Rich is saying he's not sure he's going to get to $4.5
trillion. Yeah.
trillion. So what I've done is I've mapped out all the analyst calls so far this year. I've looked at where we had Nvidia hit those milestones, and then got AI to extrapolate where it thinks it will hit $4.5 trillion, and so it is pointing at 2026.
Interesting.
Yeah.
I think the AI chips are made with an Nvidia bias.
But also, I kind of think part of the reason why I am bullish on Nvidia is because I speak to a lot of people in the GPU bond space. So have you heard about GPU bonds? They do this thing where they get people to invest. They build these data centers, essentially.
Yep.
Servers and everything. And then they deal with the occupancy, so they get people to rent it, and then they give you an income if you invest, right?
Okay.
So they are excellent in terms of like being able to supply that sort of investment to the Western investment space, but also they're Sharia compliant.
Right.
Right, because they're not giving you a profit; they're giving you an income.
Yeah.
Yes.
Okay.
So, talking to those people there and the developers and the people who are structuring the bonds, they're looking at a 7 to 10 year whole in terms of there's not enough GPUs and chips to be able to service the demand for all the AI crunching that we're needing, right? Right, we're going to have to wrap, guys. Thanks so much.
Yeah, no worries, Angie. Nice to be on the show.
Nice to. We should do it more often.
Yeah, there's a couple of things that we've got coming up before the bell today, which would be good to look at as well, I think, which is Coca-Cola and Lockheed Martin.
Yeah.
So we've got those coming out as well. So lots going on this week. Exciting week.
Yeah.
But the big one is Wednesday, Tesla, Alphabet.
Yeah. And Intel. So we'll see you guys after this break. Piers is going to be with us and we're going to be talking more tech.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat, come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash. Welcome back, everybody. Yes, he's back in the house. But
Morning, mate.
after a week off last week, we give you a holiday.
Yeah, it's important.
How's it going?
Good, man. Very good to be back. And probably
Excited?
good timing, yeah. Well, kind of frustrated, I think, with the lots of what's going on, just given the exuberance in pockets of the market, but also just quite interested in eagerly awaiting these big reports we're about to embark on.
There is a tech analyst called Dan Ives, and Dan Ives ended up in center spread in the New York Post last year because he was so vociferous on being bullish about tech and bullish about markets. And he's been entirely right, has called it incredibly well, but he is very flamboyant.
Yeah.
And our friend Piers here has written Dan an open letter to question him over his Palantir rating. Walk us through that.
Yeah, I mean, it sounds like relatively amusing because I doubt there's any chance that he's going to be responding to my email, but I just feel like it. I did this actually in 2017, actually, with Stephen Tusser on General Electric when he was just pushing the short aggressively. That was 200% lower, by the way. But I think he lost his job as the analyst on that stock later. But he actually responded to me, and I just enjoy, because these people who we listen to every day, they're on CNBC. They're paid the big bucks, and as you just correctly pointed out, Dan Ives has been, he's the most vocal, flamboyant, and televised analyst, but he's also been very right for many, many years, and he's been right on Palantir. But I just thought I'd write him a letter, in the vain hope that he would respond to me. But it was more of an exercise of just release for me, because I just can't get I've never seen it before. In my career, I've seen a lot of exuberance. I've seen a lot of evaluations that are well over their skis, but usually that comes with an enormous amount of growth. And Palantir just don't have that growth, and I'm just desperate for him. And I genuinely mean this. I'd love him to tell me, where is this growth coming from that's going to bring that valuation down?
Yeah. Let's have a look at exactly who Piers is talking about here. So there he is, Dan Ives, and he's the guy that coined.
I can't see his shirt in that one, but yeah.
Yeah. He coined, or some people talk about him, he calls Jensen the godfather of AI, but then he also is the one who continually brings up that, it's a party, and this is an all-night party, and we're only
10:30
at 10:30.
He loves to use his metaphors and his euphemisms and etc. And he's good. He's good, and he gets it, right? But he gets it, and I respect the way that he approaches things, because he avoids talking about valuations on the whole. In fact, I don't think I've ever seen him mention valuation once, to be fair. But that's kind of the world we live in. We're living in the dawn. We had software as a service and cloud, and that's kind of maturing. And now we have AI, which is in a huge growth spurt. So valuations don't really mean too much, but
it has to be anchored to something.
At some point, you need to. If it's a small cap that's no one's really talking about and it's highly speculative, it's a slightly different kettle of fish. If it's Palantir, that's now a significantly large company that's being put into indexes and portfolios, it needs to be discussed, I think. And I just would love an answer. I'm desperate for an answer. Where is the growth coming from? Because even he would admit, obviously, that you can't maintain this without a huge growth spurt.
What price to sales should companies in their stage?
Well, I think that they, for a company that's growing, 35, 38, let's call it 40.
Yeah,
which is a decent clip for a company this size, of course. But that should be, maximum 50 times sales.
Right.
But really, I mean, that's not an exaggeration. It should be maximum. That's just ridiculous. Yeah. I mean, we used to say 38 times sales was super expensive. The goalposts have moved. But let's call it 50, right? That's half where it is now.
Exactly. And even if they increase sales, 40%, so we're going forward 12 months, then that means that it's on a 70?
Yeah,
70 times sales.
And, it has had a couple of drawdowns where it sort of got back into that range. But the thing is that when that happens, that the buy the dip retail momentum just comes in and does it again. And we're in a huge melt up right now, so it's kind of, but it is running out of steam a little bit.
Yeah. Well, yesterday,
having said that,
very evident.
be careful with that one because we've seen that before. But like yesterday was a really interesting day across the board. There's a lot of exhaustion in the big names, particularly, and Park, by the way, right? So you've got Kramer came up with Fang.
Yeah.
And can't remember whether it was him or someone else came up with Mag 7.
Yeah.
But now we have Park, which is Palantir, AppLovin, Rocket Labs, and Coinbase, right? Which are the four.
That's nice.
And by the way, these acronyms sound a little bit silly, but this is what Jim Cramer's very good at. He gets a lot of flack for his calls and whatever, but that's because the guy's right in the spotlight. But he understands markets and he comes up with these acronyms. And what he's really good at is identifying the market trends, and that just encapsulates everything right there, right? Those
Palantir, AppLovin,
Rocket Labs, and Coinbase. And there are others.
It's a great.
But those are the epicenter of the retail world right now. They're all Rocket Labs I think went up. I watched it 8% every day for like 5 or 6 days in a row. RSI 86. No news at all. Just momentum and expectations for the future, and it's all just a bit exuberant. And that can continue for quite a long time, but.
And by no means, what I liked in your email yesterday is you're saying, look, I know how this works.
Yeah.
Right. I understand that these are good companies. We're not questioning that Palantir, Rocket Labs, AppLovin are great companies. Yeah. What we're saying is that these things can perform for the next 2 years and have incredible results, but the stock will at best flatline. In theory, yeah. I mean, we're living in a slightly different universe right now. I just feel uncomfortable with sometimes, and that time is now, because one thing is for certain: when you see exuberance like this, when you see analysts like yesterday, I think I counted 15 semiconductor stocks that were upgraded, right? And every day it's the same, and they're upgrading the entire universe of stocks, and they're upgrading them because their price targets are too low because of the price action. They're not upgrading because the companies have said anything new to us. And that might be validated when we see the numbers, but we've seen a few of them. But my instinct, my feeling is that I've seen this so many times before, and it's just getting a little bit exuberant, a little bit overcooked. Yeah. And also the Nasdaq's now officially in overbought territory. So, and also when Morgan Stanley, JP Morgan, and Goldman's have all upgraded, and they've upgraded in 2 weeks, and the stock goes up every time. Yeah. By the time Citigroup upgrades, you can't buy a fourth upgrade of saying the same thing. Exactly right. And yeah, exactly. I mean, and that's where we are in this. And they're going to have to, as a result of not necessarily the expectations, but the price, they're going to have to really smash it out of the park. All these guys. Oh my goodness. Yeah. And do you know what's going to be fascinating? I can't wait to. I don't think I've ever actually listened to a Rocket Labs report, because this stock has only become front and center. Right? 3 months ago, no one was talking about Rocket Labs. Now there's an acronym on CNBC with Jim Cramer about this stock. And it's a funny thing. And Hamish saying, it could be Robinhood as well. Yeah. Robinhood fits in perfectly. In fact, someone on this show asked me about Rocket Labs a few months ago. And at the time, I was like, it looks like it's breaking out. Don't really have a particularly strong view, but I hope for their sake that they were long the stock, because it was a great call. It was down at like 50, I think. Well, yeah, this is now Robinhood. Robinhood's at 105. And has it got inclusion in the S&P 500 now? Yes, it has, yeah. It has, right. So you've had that positive as well. That's in there. There's a lot of that going on as well. Yeah. Okay, on to numbers this week. So chart off, thanks, guys. We've got Google coming up. So Google, I mean, this week's slightly unusual because normally big tech have a big cluster. Normally it's Google, Amazon, Microsoft, Meta, at least within the space of 48 hours. Yeah. And then Apple comes later and Nvidia comes much later. But this time around, it's just Google and Tesla. Tesla doesn't move the market anymore. Google, to a lesser degree. The big boys for the market are Meta and Microsoft, because they're the two biggest Meta's not even a hyperscaler, but they're doing so much capex that they may as well be. So Microsoft and Meta, in terms of the capex AI, will be critical. So that moves Nvidia, even though Nvidia don't report for another. It's directly to the whole supply chain. So I mean, it's critical. I mean, if Microsoft come out, I mean, they're not going to, but if Microsoft, for example, came out and said, I mean, their cloud business is one thing, which seems to have actually picked up again, which is interesting. Park that there. If they say that they're going to cut capex and they say something negative about the whole capex spending, that will be hugely
there'd be big implications for the market. That's backed up by Amazon, of course, which is the other big one, and Meta. But those guys are next week.
With where things are, though, is it enough for them just not to increase, so incremental spend?
Yeah, well, I think that, exactly. I don't think they need to increase the spending because they've already done that 3 or 4 times leading up to this over the last few quarters. I think they just need to...
But they need to warrant...
Yeah, well, kind of, yeah.
Things going higher.
But I just feel, I just can't see how they can raise it again. Because do you remember we had, a couple of quarters ago, we had a situation where it was in the wake of Microsoft, there was a lot of noise around Microsoft cutting their CapEx. And we had all the DeepSeek noise, and then these guys came out and just put a lid on all that speculation and raised their guidance 3 or 4 times. Meta have done it quite a few times as well, just impromptu. So I just find I struggle with how they're going to raise it again. But I think if they just confirm that their spending targets are on track, it'll be enough. Having said that, we're at, it depends which stock you're talking about. Microsoft is absolutely living in the clouds right now, whereas Google's kind of underperformed.
So we have got that chart for you, and guess where their numbers were.
There we go. I mean, look at that. Do you remember exactly right? Look at that. Wow.
If you ever need an example of where you buy the numbers, it is that.
Because it's hard to get that right, but yeah.
That must be about...
It's a big move. Also, Microsoft...
40 up days and about 10 down days.
It's an insane move for a company this size as well. Particularly if you consider that just prior to those numbers, we went through a patch where people were like, all the usual stories came out about how Microsoft were plateauing and they were going to struggle for growth. And then they come out and just surprised me, everyone, about mainly the cloud business, right? These are mature businesses, and they keep finding new gears of growth. It's quite extraordinary. Absolutely. I mean, and the AI capex is part of that story, but that moved like that because they gave the market confidence about their cloud business again.
I think that this is the excess that we're talking about is exemplified beautifully in this, because 480 is normal, right? For me, that's absolutely, I get that. But everything here is the momentum jockeys, is the final excess that is just irrational in both our views, right?
Yeah, I would agree with that. I just think Microsoft, I mean, it's just all a little bit, it's just all very uncomfortable. I just don't know how it plays out. I mean, I woke up this morning looking at what's going on. Yet another big upgrade. All the strategists are kind of just trying to trace the price action themselves. Wells Fargo out this morning, joining the crowd of people saying there's another 10% upside in the market this year. Citigroup talking about the same thing, but also highlighting that the 3-year highs in crowding in tech. I've got clients saying to me, "What the hell's going on? Why is Europe such a basket case?" When I just kind of just laughed to myself because I was like, "I've told you so." but I mean, it's always but now what, right? Europe is a different subject, but what? Okay, let's assume that 3 or 4 or even 2 of the 7 beat and raise, and it's epic.
Of course
let's assume that. That's quite an extraordinary concept that they beat and raise, by the way. And the market's and it's up like 5%. One of these, that would be quite an extraordinary outcome. But let's assume that happens. We have yet another little final squeeze up, because it's getting very, very, very kind of capitulation squeezy right now. All right. Yesterday, the market on the open was like sold off, not a single bid anywhere to be seen. Bang, we opened and it just went straight up in a straight line.
Let's have a look at that, because something kicked in.
I'm not quite. Yesterday was just very grabby, right? There was no news. It was just literally yet another day where people just went, "Hang on a sec, I need to be part of this, otherwise I'm going to look like an idiot to my investors because I'm not participating in this rally."
Where's my?
Have you got the GIP from yesterday?
That's 3 minutes.
Oh, no, hang on, you need the Nasdaq futures though, by the way.
2 minutes. There we go.
There we go. Look at that.
That is a machine kicking in.
Yeah.
That's not people.
No, I mean, I don't know. It's hard to tell. It might be a machine just kicking in again, but to me, it felt a little bit human-y as well in terms of just the general vibe out there, which is no one is long this market, which is an extraordinary thing to say where we are. And when I say no one, of course there are people that are long, but on the whole, there are a lot of big, mainly in the hedge fund world, who are just not long these stocks and are having to scratch their heads and think, hang on a sec, if we do go up another 10%, I'm going to look like a proper muppet for not being part of this.
Yeah.
So I'm just going to have a little bit more upside on the open, particularly with the tech earnings, with Apple and Google that have underperformed and that potentially might beat, which means, of course, the Nasdaq's going higher.
And that was the beautiful thing from yesterday, wasn't it? Seeing the thing that made sense yesterday was Alphabet's
This is the beautiful thing. I spoke about it a few weeks ago on the show with you and Ange. This to me makes a lot of sense. I love it when things make sense. It's a giant.
Yeah.
It's cheap. We all know its qualities and its downsides and its lack of growth in the short term. But this is people realizing that they're underweight, realizing that there's a general buzz on the street now that the AI business is going to be able to counteract the lack of market share, the loss of market share in search.
Mm-hmm.
And there's been 3 or 4 upgrades of this stock in the last week, 2 weeks, for no reason at all, beyond what I'm saying. Like, well, hang on a second, I need to get ahead of this problem. It looks to me like it's going to 200.
And there's
one way or another.
There's the target price upgrade you're talking about. So look at again, Morgan Stanley, 10% upside, Bank of America, 13% upside.
Bearing in mind, they wait until a few days before the earnings and the price action before they say a word, which is the way this world works.
Yeah.
5 weeks ago, when this stock was, everyone scratching their heads going, is it the end of Google, price action 0, no one says a word. They need that little bit of nudge, but then it's a self-fulfilling prophecy because everyone's now jumping on the price action. So, and then the price action 9 times out of 10 confirms what's going on under the hood anyway. So if I had to make a bet on this, which I actually have got in the book, I'm going to hold this into earnings.
Right, and
that's a positioning story. And I don't like holding things into earnings, and I get burnt all the time doing this, but sometimes it makes sense. I did it with ASML the other day and got slaughtered, which made me feel like a bit of an idiot, but this is a different kettle of fish. I just feel like they are going to update. The market knows that they are in a low growth moment right now, but what the market wants to hear is what they're going to do with AI. Slightly to a lesser degree what they're going to do with Waymo, which is their free option, but mainly they're going to want to hear what are they going to do with their AI and what are they going to do with their cloud business, which is now featuring on the P&L in a more prominent manner.
Right.
And it's growing. Suddenly they've found growth in the cloud business, which obviously they're the smaller of the four hyperscalers, but they are a hyperscaler. They're just smaller and it's less relevant to their overall business.
Yeah.
But that is kind of just kicked in, which is interesting because it's not really a massive feature, the cloud business, usually in the earnings report. So I think the risk is to the upside with Google, and I think, technically speaking, which is obviously very important right now, that's going to head to 200. So we'll see, but positioning is on side for sure. What's this thing that Palantir drops 50 buy more up? Wow, okay.
Just championing the position. Right, so we got Google. Now, you said Tesla doesn't matter to the market, but what do you think of the actual
Listen,
numbers?
Tesla is becoming, Tesla has always, whenever I speak about it on the show, I always just sort of, to a degree, roll my eyes because it's not really a stock that any of us can make a professional trading strategy around. It's a complete lottery. The car business, as far as I can see, is in the absolute doldrums. They've got enormous. The competition that we've spoken about for many years with Tesla has arrived. We are here, right? The Chinese are killing them. Yeah. The Europeans have stopped buying their cars. There's brand damage. There's a whole bunch of other things going on, but it doesn't really matter because we're at the pivot point for this company where Musk is essentially going all in on robotics. But again, that's quite some way away from being monetized. Yeah. So we're at a weird moment. I have no idea what's going to be said. He's going to try and massage it one way or another. The car numbers, I know one thing for sure, the car numbers are going to be awful. But how much more awful than expectations? I don't know.
This is the thing. So what's coming across is that companies that have got many options where the CEO can give a positive message, right? Google has Waymo, YouTube, the cloud business. Doesn't have to talk that much about search.
No.
Right? So there's plenty of options. Elon will just do his usual lies of the robot. The robots are 6 months away. Robotaxis, here and happening, and then come up with something else that just just
dangles a carrot of some description.
Yeah.
When you say lies, it's interesting because in my experience with him, he he kind of flip-flops between being overly brutally honest about things and then walking that back a bit because he realizes that that's not really what the market wants to hear. So it could be anything. He could come out and say anything. Like that's the nature of this
Almost
guy.
sounds like he should get into politics.
Yeah, almost, yeah. Well, that's another thing. You know, I doubt he's going to talk about that in the conference call, but it's very clear what the market thinks about that. Right?
Yeah.
But yeah, for me, this is first of all, the market won't care at all about what's going on with Tesla, and second of all, I have no idea.
Yeah. Now let's go on to some of the stocks that you have covered. Plug. Yeah. I mean, incredible. Well done.
Well, Plugs,
Not
yeah,
often I say that.
luckily we got there in the end with this one, because it was a little bit volatile in the aftermath of the conversation we had initially. But yeah, I mean, listen, this is a fascinating stock, and it's been around for a long time. I followed it for a long time, and make no mistake, this is not some speculative company. You know, these guys have got Walmart, Amazon, Costco, all the big box retailers as their customers. They just have been struggling with the balance sheet and some regulatory overhangs, which have now been put to bed. And you know, they've got 27% short interest, and we're in a market that's short squeezing small caps just for the sake of it. So it's kind of got a perfect storm.
But that is one thing that the most shorted basket, as we looked at yesterday, is up 83%.
Yeah, there we go.
Is this just the beneficiary?
Yeah, absolutely. I mean, there's a huge portion of this story right now that's benefiting from the short squeeze in the basket. But it also has some fundamental things underneath, which have, like, I mean, there's 5 different things that have happened, including the contract in Uzbekistan, the CFO buying shares for the first time since 2018, the huge relief from the regulatory overhang, and they also won a new hydrogen deal the other day. So there's a bunch of things going on under the hood.
Okay, so still on that one.
Yep. Yeah, up to 3 is where I thought it was going to get to. So we're, got another $1. Okay.
Marvell.
Marvell.
You've made me some money on this, actually. Thank you.
Yeah, well, I mean, I doubt it's very much because it hasn't gone very far. But you know, this is the price action in this stock is just testament to how misunderstood and how unknown it is. And I use you as my example. I wrote about it in my note. I mean, you've got an enormous knowledge of markets and been in them for 20 years, and you thought this was a toy company. So, I mean, and I'm not joking.
And a movie franchise.
Yeah, exactly. Which so good. But the thing is that see that gap. That gap's going to be filled. That is desperate to fill that gap.
Right, so that is 85 bucks.
In fact, I just saw. Do you know what? Actually, I probably should have seen that before, but that's beautiful. I mean, I think that that's going to be filled.
That's what we're here for.
But the bottom line is that anyone that's listening to this show and trying to trade this stock, it could go up, it could go down tomorrow morning, whatever. It's living in a weird world because it doesn't have the prowess or the knowledge base or the media coverage of all the stocks that are going up in a straight line. It's not a momentum stock. It's not a favorite stock. It's not a retail stock. Retail, I'm sure, probably don't even know what it is. Well, they probably do, but it's not part of that basket. But it's just bubbling along under the surface. I would imagine it has a lot of support around this area. I'd be surprised to see it break down. But we need an update, right? This is new. The CEO came out and said hybrid, high bandwidth custom memory chips that we make and no one else makes, this particular type of chip that goes into the data center is the future. That's what put it, I mean, this stock, to put it on the map is incorrect because it's been on the map for a long time. But we're going to need to hear an update on this. And then I would imagine it's kind of just a bit of a choppy story. But
what it got hit hard on was the ASML results.
It was I think one of the only semis that was down in the supply, because ASML's results have nothing to do with any other company. It's purely to do with the lumpiness of their orders. It's irrelevant. There's no read-through.
And the guidance,
Their CEO is incredibly conservative and quite frankly shocked the market in terms of how conservative he was on top of last quarter. But it's a company-specific issue. Look at their biggest customer, TSMC. They came out the next day and told us that the world's on fire.
True.
Right? ASML has no read-through. It's an unusual stock, because most of the semiconductors you can read through to another one. ASML you can't. Okay. Because ASML sell a very expensive high-end machine to TSMC and Intel, and it's got nothing to do with that.
Right. New ideas that we haven't spoken about. Has there anything gone into or come out of the portfolio? Specifically gone into?
Yeah, what have we got in there at the moment? It's mainly around in the small cap space, to be honest with you.
Right, okay.
I'm still bubbling around with Intel. I mean, we've talked about it.
Yes.
That's coming out on Thursday night. And the price action is interesting. Again, that also lives in its own little world. But if you look at the price action of Intel, it's shifted quite dramatically because it was rallies were being sold and then sold again, and it was going back to the bottom of the range around 1920. And now rallies are being sold a little bit, but then there's support, and then it rallies again. It has days when it's up 3.5% when the rest of the semis are flat. There's some interesting price action under the hood, which indicates to me that there's some real buying going out. There's some nibbling going on out there.
Yeah.
And from a technical perspective, it's holding this mini little pattern here, which looks, and with their earnings report's going to be interesting. It's not going to be great, but it's a matter of what it is versus expectations, and what is he going to say about this gamble, this huge gamble that he's made, which is taking them away from their legacy business and putting them into next-gen chips. Which, by the way, in theory, I love that. It's great. It's ballsy, but it's potentially exciting.
It's like, me saying, right, I'm going to try for the Olympics in 2032.
Yeah. And I'm going to change my sport, by the way.
But I'm going to give up everything.
I'm good at hurdles, but I'm going to do long jump.
Yeah, that's it. Now I'm going to, or maybe lawn bowls.
Yeah, that's probably more your speed. Yeah,
that's kind of what we're talking about with Intel, isn't it?
Yeah, a little bit. Yes and no. Yes. The foundry business. It's Pat Gelsinger, who obviously was the previous CEO. He did the opposite to what this guy's doing. He went, we're doubling down on foundry. We're going to return to our roots, and we're going to spend $20 or $30 billion trying to do that.
Yeah.
Which cost them a lot of money, a lot of margin, and it didn't really work.
Yeah.
He's coming in and going, right, you've got this all wrong. We need to focus on the high margin growth business, which is the AI business, and which I think is great. But the only question is, that's probably 2 years away from kicking in.
That's the
so
problem.
In the meantime, the cash machine is being drilled down, which will be good for the cost side of the business.
Yeah.
But also, what's it going to do to the revenue side of the business? So it's a tricky one. It's just a buy and hold. In 12 months, we'll see where we're at.
Right. Guys, we're going to keep going and go through the all sessions, and then Angeline's going to come in after we've done all sessions to quiz peers, because this is great stuff. So you mentioned, and if there's any questions that people want to look at, because Pelican's talking about ALPD. Is ALPD one that you know anything
Where are
about?
we? ALPD, hang on. Are you talking about the...
CoreWeave does business with them.
Are you talking about the...
Applied Digital?
European? Yeah, I don't really know that stock.
Right, let's stick on Apple then. So Morgan Stanley out with...
Yes, we haven't talked about that.
Yeah.
Yeah, sorry about ALPD, guys. There's some that get slipped through the net. That's one of them. So Morgan Stanley had an interesting note this morning, I thought, on Apple. Again, interestingly timed, isn't it? A week before the numbers, they come out and say something about the stock.
Yeah.
And Morgan Stanley are one of the few that whenever they write something, I listen, because I respect them. And they basically maintaining their... Morgan Stanley, just to be clear, are one of the big bulls on Apple. They've chopped around a bit, but in general, they lean bullish. They believe in the services business. They believe in the iPhone upgrade cycle. But interestingly, the note this morning was reiterating their buy, saying that the services are going to be strong, 12, 13% growth, I think they're saying for that.
Right.
Which is essentially their software as a service to a degree. But also saying that they don't agree with the AI strategy of buying Perplexity and dealing and getting into bed with Anthropic.
Okay, good.
They think it's misguided, to quote them, and they're not convinced. It's just one person's view, but I mean, I thought it was interesting that they came out with a note reiterating their positivity on the company, but saying that the one potential growth engine they don't agree with. So
they're just in such a
they
mess
see services as the
AI,
growth
aren't
engine. They are a little bit, yeah. I mean, as I said, I quite like Apple into the earnings report.
Well, let's see how they're going to open this morning, because we're going to all sessions opening bell. Right, let's see how they get off and run. Are we going to make peers ring the bell? Is there a bell around you there? Go on, give it up. Perfect, look at that. Right, so let's have a look there. We've got Alphabet continuing their march higher, actually, and Intel as well. What else?
Sort of flattish. I mean, it's not going to be, given the moves, given the levels, given the state of play, particularly after yesterday's session. I'd be surprised to see any big moves in the big guys.
And Nike really continuing their march higher, aren't they?
Yeah, they are. Where are they now? Well,
74.
There we go. Yeah.
So they've jumped.
But most importantly, they're holding on to the gains.
Yeah.
And the market is kind of the incremental news on this is positive. The positioning has had to quickly shift and catch up, and obviously you've seen the obligatory upgrades. I think we're kind of going to tread water for a bit in Nike for the time being, because it's been a big move off the bottom and they've still got a lot to prove. I mean, the numbers were better than expected, but they weren't great.
Yeah, exactly. There was hope for the future, but that hope is now in the share price.
I think it was just a positioning thing, right? Everyone was offside and that's been corrected. So I don't really have, I think it's kind of a neutral feel on that one. Palantir's down, yes!
33 basis points.
If I had a pound for the amount of times I've seen it down in the pre-market and then up in the actual market.
Exactly.
But yeah, it's exhausted though, but there we go. Palantir's off a little bit. I mean, it's just a general exhausted kind of feel to it all, I think.
Oracle down 1.7? I haven't seen anything there.
I haven't seen any, or maybe there was a bit of news on that actually, but again, Oracle's had a huge re-rating.
Yeah.
And it is, very exhausted.
It's soggy morning though with those favourites. Like as we've, had this theme on for a couple of days now. Nvidia down, Palantir down. The big performers are.
Moderna, that's interesting. Yeah, I mean it's just all very exhausted, right? I mean,
yes.
And now it's a holding pattern because Google is tomorrow night, and they are not as important as Amazon and Meta and Microsoft on the CapEx guide, but nonetheless they are very important. And I mean, if you're a trader, even if you're an overly exuberant, blind retail nut job, you still are going to wait and hear what they've got to say.
You would hope so.
Yeah, maybe.
Let's have a look at the crazier end of the scale. We've got
plugged up again. There she is.
Nice.
But look what's going. So look, the big stuff's kind of exhausted and just not really doing much. But
yeah,
in the small cap world and the heavily shorted stuff, it's. I mean, yesterday they came off a bit, but there's this little jumpy bid pre-market every morning. It's the same kind of stuff that's doing it. And there we go. Coinbase is up again.
Trump Media up 4% yesterday.
And, there we go. I mean, that's the ultimate silly stock.
And there's the downside. Good stuff. Right. Okay, we'll let Angeline in at you because you've got to talk Estee Lauder.
Oh, yeah. Okay, good.
And going to talk about that. So we'll do a quick 1 minute changeover, a Ferrari pit stop, and Buckworth can catch his breath. And then Caught Short is going to also ask you on CrowdStrike after the break as well.
Okay, cool.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Okay guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Come on. Cash returns, come on. Oi! Well, you're not going to get better than cash returns.
Hey, trader friends, welcome back. We have Piers going to talk about CrowdStrike. Mo, I know you've got some questions out there as well, Pelican. And we have tons of people. Interestingly enough, Rich was saying, was ribbing you on air earlier this week. I was like, no, you know, maybe we need to talk more about Estee Lauder. And he was like, yeah, but Piers is a tech guy. I'm not sure what he would say about Estee Lauder.
Well, it's fair enough. I mean, Estee Lauder was a stock which I was we're talking about.
I liked your call, though. I liked your call.
No, I mean, obviously, I don't just do tech, but I mean, I do everything. But tech is my focus. But Estee Lauder's, you know, whatever. The game is to make money, right? So whether you find a stock that you think is going to go up or down. Estee Lauder is interesting. We spoke about it 3 or 4 weeks ago, maybe 5 weeks ago, and it's been part of a rotation into beaten up big US brands like Nike, Estee Lauder, etc., who have been dead and forgotten by the market. And I think Estee Lauder probably wins in the stakes of being dead and forgotten. I mean, the drawdown from the highs is nothing short of astonishing. I mean, you can look at that and go, oh my God, it's low, but you have to remember that the sales difference between there and there is obviously quite significant. But nonetheless, this is Estee Lauder. Used to be a big market darling. They've lost their way in a number of different ways, and with regard to, it's in a similar fashion to Nike. They've failed to adapt and compete successfully with a lot of the boutique brands, and of course, in this space, you know, the celebrity endorsed brands of makeups have made a huge, hugely difficult for them in the competitive space. And then, of course, China and their lack of adoption of digital at the right time. So they've been mismanaged, and they've obviously had a huge hit to sales. But the brand is still there.
And look, since you came, we have a solid breakout here.
Yeah,
you know,
it's interesting. I mean, it's kind of consolidating after some very big gains, and there's been about 5 or 6 different analysts coming out, upgrading, of course, because they've realised that the stock's moved, so they have to say something. But it's interesting. I mean, we haven't heard an update from the company, and yet these guys have come out, and which is the classic, right? They have to come up with something because the stock's moving. So
otherwise, they have egg on their face.
Otherwise, they just look a bit silly. But that's the game. But it's all been around the positivity on their new product lines, China, and just a general positive vibe versus where they've been. I think that listen, if Estee Lauder pulled their finger out and managed to get China back up and running, and managed to get, you know, a few ducks in a row, this stock has, you know, a huge amount of upside from here. But my view on it was down at wherever it was when we first started speaking about it. I saw this as the trade for me was from here to basically where it is now. Now I kind of just think I just wait and see what the company have got to say.
Well, what I love about this is that since we last spoke about it around early April, it has obeyed the rules of technicals, right? It broke past the high seen in February, then we saw it march higher, and then it broke through the highs late January. And now we're seeing consolidation, and perhaps depending on, like you said, what the company says about its outlook, then perhaps, you know, the next point of interest will be the high seen in August 2024. So that remains to be seen. We've got someone else on the chat as well. Morning, Jugger. And a person also talking there. We had someone ask earlier, caught short, asking, yes, what does Piers think about CrowdStrike, the cybersecurity?
This is a stock that's obviously in the epicenter of my world. You know, what I think about CrowdStrike, I think that these guys are the future. These guys of cybersecurity, they're the pure cloud-based cybersecurity company. So Palo Alto used to run the show. Now CrowdStrike run the show in terms of where we are. They are a little bit of a volatile company in terms of earnings reports. So I definitely would never hold this into an earnings report, particularly after a big rally, because it's just kind of a lottery. It's quite lumpy and quite noisy what they say in this space. But listen, the bottom line is that if you just step back from the day-to-day volatility, there's a secular bull market in cybersecurity for obvious reasons. I mean, Microsoft yet again had another security breach the other day. AWS have just done a big deal with these guys a couple of quarters ago. There's the demand for cybersecurity is not going to go anywhere.
No,
If not, it's going to increase.
Yeah.
And who's the winner? Who are the winners? And there's 5 or 6 other smaller guys. CrowdStrike are the cloud-based winner, in my opinion. So it's a stock to own.
Are you concerned by those?
It's a bit expensive, by the way, but.
It is quite expensive. It's also, like as you say, quite volatile, and had those service outages. Which, might I add, Piers, I was caught by that one flying to Chicago last year.
Yeah.
O'Hare was a nightmare. The queue was so long, I thought I was queuing back to London. That was how.
Yeah,
bad
well, I
it
mean,
was.
and again, that's just going back to the point I was making. This has a lot of bad media sometimes, but that's the nature of this business. These guys there are outages, there's glitches, there's this, there's that. But I mean, can we do a longer term chart than that?
Yeah. I was going to be devil's advocate as well. Are you concerned by
look at the drawdowns though.
Yeah.
Right. So you have to be a bit careful with this stock. But put it this way, what do I think about CrowdStrike? It's a winner. Buy the dips. Do not chase the rallies. That's what I would say.
Rallies. Are you concerned by like Fortinet and the increasing competition in this space, or do you think it's so far ahead?
I just think that they do different things, and that these guys are the winner. Particularly the pure cloud-based winner. You've got to remember that, right? The other guys are also involved in hardware. There's no hardware in this company at all. But every space has its winner, right? There's lots of other little competitors niggling away, but this one is it's like DraftKings in the gambling space, right? They're the pure play.
Yeah. Do you think that maybe this is the daily chart, trader friends, as you heard Piers say that, be wary of the drawdowns. Do you think we've already had a drawdown here, or do you think could be a bigger one?
Well, that drawdown that you're pointing to at the top right of the chart there, that's got nothing to do with earnings. So we wait till those other ones are earnings. So
So we wait till the earnings have.
I would never ever hold this stock into earnings. They always have something that they say. I mean, look at the drawdowns on earnings, but. Look at the overall trend. So this is a tricky stock, right? If you want to trade the stock or you want to own this stock, then wait for the big drawdown, buy it as a trade. Or hold it in your portfolio and forget about it and just don't worry about the drawdowns. But that's the nature of this stock. It's a tricky one.
It's an avocado stock by the dip after. After the drawdown. Another one I want to look at as well that we talk about quite a bit here. Thoughts on SoundHound?
Oh wow!
Yeah.
Well, I mean that's one of my favourite stocks.
Okay, very quickly, because we've got loads of people who have positions in SoundHound. It's also one of my favourite stocks because I love car stocks. I love tech.
We spoke about this.
You get this in the Mercedes-Benz. You get this in the Hyundais.
Yeah, I mean the car part of this is quite well known, but what's more interesting is this thing called I want to say Angie, which would be really funny, but it's kind of.
Is it Angie?
I think it is. I should know the answers to that question. I do apologise.
What does it do? It must be very clever.
It's their voice assistant specifically tailored towards restaurants, and also it's being used in the healthcare industry. But these guys have been growing. Listen, SoundHound is growing aggressively. Got 150% revenue growth, and they've been buying. They bought a French company. They've been acquiring things and spending a lot of money, and that's the problem. And by the way, let's just use this as an example, right? With my Palantir example. These guys are trading on 110 times sales or something ridiculous like that. But they've also got 150% revenue growth. 150% revenue growth. That's more than 3 times more revenue growth than Palantir. Now, they're not comparable businesses at all. But this is an AI winner. It's volatile. The market is struggling with it. And I do find it interesting because it's struggling for the right reasons. It's struggling because the bottom line isn't there yet, and they're worried about the spending, which means the market's thinking rationally about this stock. Begs the question, why can't they think rationally about many other stocks? But this is trading rationally. Technicals have improved. It held the 200-day. It broke out aggressively. What happened the other day is a good example of what happens to this stock and what's possible with this stock if you get good news or if the market decides to buy it. It was up 18% or something. It broke out aggressively on volume, and then it came back and consolidated as it does. I just think it's all about timing, right? The growth is there, the business is there, it's well known enough. The bid is ready to go. They just need to show some progress on the bottom line.
And you think you're going to see this impetus or this catalyst from the professional services restaurant front?
I think so. I think so. I think that's the marginal difference they're going to make.
Interesting, because
the auto business is quite well known, and it's high growth. I just think we might be as much as 12 months away from a moment where they hopefully have sorted their bottom line out.
Yeah.
I think that if you're buying it around $11 or $12 a share and you hold it for 12 months, it's almost a no-brainer, dare I say. I like it a lot. It's one of my favorite stocks. It's in the book.
Cool. Right, we got to go, trader friends, because we have Jolie waiting in the wings to talk about strategies using options for Tesla, Intel, and also we have Alphabet. Right, stay there. We are going to be right back.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat, come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Hey, trader friends, welcome back. And we have Jolie with us. We have had so many people ask about you.
Really?
Yeah, Julian Master was like, I miss Jolie. When is she back again? So I gave the time. Then we had her here, and then everyone was rushed out of the office. You saw it here live.
Yes, that's right.
Because of the fire alarm.
That's right. That's what it was.
Yeah, and I was messaging you madly outside, going, "Where are you, Jolie? Because I don't know whether we can get back in on time."
And I was messaging you. I was saying, "Stop, drop, and roll."
Are you guys burning in there? Like, no, we're outside, freezing up on stuff. Stay safe. Yeah. But what is really hot this week, of course, is earnings. Just whack up my chart for the trader friends here and
take a look.
Trying to zoom in. Here we are. It's not really working for some bizarre reason, but don't look at people. The earnings calendar here, of course, it all heats up, and it's starting to become extra exciting from Wednesday, because we have Tesla, we have Alphabet, we have IBM, and we also have Intel, and not forgetting, the big ones that are not in the tech space, Dow, American Airlines, as well as some consumer names there. So let's have a look at some of those, because our trader friends have been asking, how do we do the whole options thing that Jolie tells us? And she tells it to us so well, because she takes it through step by step and slowly. So let's have a quick look first at, should we look at Tesla first?
Yeah, let's look at Tesla first.
So if you come off my screen, people, I'll bring up something I've crunched just recently on Tesla. Ah, great. Okay, Jolie, you want to talk us through yours?
Sure.
First?
Yeah. I mean, if we could just take a moment of appreciation for this massive expected move. This is what this orange like ruler is representing. Look at the width of that. Like 20 points wide each way, like crazy. Yeah, so for Tesla right now, we're seeing prices at 328 approximately. And what are we thinking? Are we bullish or are we bearish on Tesla right now?
I'm bearish. I just think that
earnings?
so
Sure.
much has come out on the robotaxi. You know, all that was baked in earlier on.
Yeah.
And so there were some issues with the robotaxi as well. I don't know whether
Yeah.
you saw on the Twitter sphere and stuff like that. But also, I don't think, and Piers, who was here just now, was very, very bullish on the whole humanoid news, which is going to be like the next, you know, cult revenue chatter for Tesla. But I don't think that's going to come this time round. I think it's going to take a while.
Yeah.
Which is why I'm a bit bearish.
Bearish, sure. Let's use that sentiment, and we'll first start with a conservative strategy, right? Which is going long, buying. So if we're bearish, we'd say, hey, you know, buying a put option would match that up, right? Because if we buy a put, it means we're entitled to sell at the strike, which we can shift higher than where we think it's going to move, which would be down for bearish. So say we think this guy's going to come down to like 320, for example. If we buy a long put at 325, it's quite expensive, as Tesla is, because it's so volatile. But say we're on the right track. Say it does a big dive down to 315, for example. That's 10 points in profit, 10 times 100 to reflect 100 shares of stock in the options contract is 1,000. So if we pay 1035 for it and only get like 1,000 back, that wouldn't be exactly cost effective, but we could definitely buy this 325 put and lower our price. Say we think, oh, this guy's only going to be worth 950, and if we get that price, then it kind of makes sense, right? If things move in our direction, and we've got that exact intrinsic value, then that would line up pretty nicely. But if we don't get filled, then hey, that's, you know, they're asking for more money. That wouldn't make sense to me as a consumer. So if it gets filled, great. That's an option for a profit. If not, we move on and we pivot to something else. So that's our conservative strategy. Do we want to go for a less conservative strategy or not necessarily?
Well, let's see whether we can, you know, get a bit more excitement into this.
So say we think that this guy is going down, it's bearish. We want to sell a call, get some money coming in. We're like, hey, there is no way Tesla is going to be above 340, right? So if I short a call, I sell a call, and Tesla's at 335, that's going to be out of the money for the long option holder. We get to keep the profit or the premium and then call it a day. That's the goal for shorting, right? So say this is an uncovered short call. We could sell at 340, get this nice premium, and say we're on the right side of things. All we need to do is, you know, theoretically we could close it out for a cheaper price at expiration, or we could just keep the premium and hope that we are on the right side by expiration.
Now, because I know that the earnings season is a big, big thing for options traders, would you normally take this trade off before the earnings, or you would wait until after?
For Tesla, which is quite volatile, I personally would take it off prior expiration. Yep, because anything can happen, and we've seen it happen.
Right, gotcha. Interestingly enough, trader friends, the level that Jolie mentioned there, that 315, kind of ties in with that critical level that I'm looking at, which is around 315 or 322. as you can see here with my yellow golden perforated line there. And the reason for this is because we saw support. Can you see that band of support here? And also in terms of where this share price has been moving, the price action since May, we are seeing this consolidation. So if we fall below that 315 on bad news, I expect it to then perhaps go further down to the lows, maybe seen 5th of June even, right? So that's how you could play that from a shorting point of view. Let's go to the next one. Let's have a look at Intel, if we may. Intel,
Sure, yeah.
Also coming out with earnings. Some of the key challenges you heard Piers talk about just now. You know, the foundry business has been posting ongoing losses. It's also been losing market share to the likes of AMD and also Nvidia. And it's got this new leadership right now. The new head's name is incredible because it sounds like Bhutan, so it's Lip Bhutan. And he apparently has been tasked with really kind of taking Intel back to its roots. After quite a tumultuous ride with the former CEO that was trying kind of new things and it didn't quite work and they lost market share. So still to be seen what Lip Bhutan is going to say, but we do know that it is currently on track to ship around 100 million plus AI PCs by the end of 2025, and it looks well supported in terms of its domestic manufacturing in the US because of the CHIPS Act.
Sure.
So for Intel, I would probably be looking at maybe a bullish view because it's had so much
bullish view. For your bullish view, are you looking more longer term, or do we want to trade on the immediate earnings?
Yeah, I think on the immediate earnings.
Immediate earnings, we're still bullish. Beautiful, great, nice
just
contrast.
Not because I think it's the stock's doing well, the company's doing. I just think it's been not doing well. This is a contrarian view.
Sure. We'll take the contrarian view. Great. So we'll start off with our conservative strategy first. We're going to buy a call, which matches up more with a bullish strategy versus what we talked about before with Tesla, where we bought a put for a bearish strategy. So for bullish strategy, we're going to buy a call. We think this guy's going to rise. And so if it rises to, say, where the expected move is, maybe like 24.8, for example, and then if we buy at 23.5, we get to own the stock at a better value than what the market can offer us, which is great. But again, it's earnings season, so we definitely don't have to take the underlying stock on assignment. We are the long option holder. We control the shot, so we can certainly close before expiration when things get super volatile. So with this one, we'd buy a nice little 23.5 call for 81 USD. And if things go to where the expected move is, like 24.5, for example, that would be or 24.8, for example, that would be like 1.3, $130. We give $81 in an investment and get the 131 back. For example, like if things play out in our favor, that's a profit. So that's our conservative strategy. If we want to be a riskier trader, we could sell a put option, which has the same implications, right? If you are assigned the stock, you have to buy it, similar to a long call. So say we want to kind of mirror that, or rather we don't want to mirror that sentiment. We want to, if we think that Intel is going up, we could sell a put option pretty far out of the money. So say, for example, we're like, no way Intel is going to go all the way up to 28. I could sell a put option, which would, or rather, oof, I'm in the wrong direction. My bad. Say there's no way Intel's going to drop all the way down to 21. We could get a nice little $12 here, and then if we are right, it is out of the money. Then we just get to keep our premium. It's all about the small wins. If we try to bite off more than we can chew initially, that's when we get burned. But something like this, which is still risky, but not risky to the point where we're accepting so much money, right? We're taking $12 in premium, and then if if it's out of the money, we just get to keep it, and then we never hear from the owner again. Yeah.
So the mantra for options is small and often. Right?
Small and often. I like that. It depends on what kind of trader you are, but sure. I think for beginners, probably safer spot to start with.
Yeah, exactly. And also then, then you kind of get your way around. I always find it interesting when, starting off, Tom and Bat are like, you want it like secured or unsecured, or, a lot of the single legs are probably a bit pricier, probably a bit riskier, but there are so many strategies having multiple legs to quantify that risk.
Sure. Yeah.
The ruler, and I just noticed you call it a ruler, the brown bar there.
Orangey brown, burnt orange, if you will.
Yeah. Some others, I've heard them call it, the bar. Or is there any rule of thumb? Like, do you look to see that there is a long ruler before trading a specific instrument? Because I know that when you're trained on this, everyone's told you should be able to put a post-it note on the name of the financial instrument and almost not know what you are trading.
Yeah.
Because it's all purely mathematical, right?
Right. So I would say I wouldn't base my decisions based off of how wide the expected move in is, but I would say that it does correlate with the amount of volatility. Like with Tesla, probably one of the most volatile stocks, right? That ruler, that expected move. Woo! But with Intel, a little bit more buttoned up, a little bit more conservative, just a little tiny expected move. So I think it can inform, the strides you want to take, but I wouldn't necessarily base what I'm trading off of how big or small the expected move is.
Nice.
Yeah.
And for those of you that are trading this space as well, Intel, just be aware that it has currently moved above some of the moving averages, like the 20 EMA, the 50 EMA as well, which is signaling a buy indication and overall bullish trend environment. But for me, I'm kind of thinking, well, it's had a whole load of, bad news recently. You've seen a lot of, bag holders here as well. I've put the line there to show the downward trajectory, but I think, it's had enough pain. So maybe a contrarian view is it might potentially have an upside surprise on that earnings. Alphabet, Google. Do you use Google, or do you are now more like a Perplexity kind of gal?
Oh, definitely use Google 100% every day. I mean, obviously AI tools are amazing too. So it's funny because I find myself typing into like a chat GPT or something what I normally use Google for, which is interesting. Yeah.
Yeah, so Google's interesting because the fact that you're doing that, there is a concern amongst analysts that cover this space that, at some point we get that super tanker pivot moment when suddenly all these people using Claude, Gemini, ChatGPT like you, they just load all those apps on their phones and they no longer use Google.
Yeah.
And then what happens to the ad revenue generated?
Yeah, it's such a fair point. Yeah.
Space for Google. Now, Alphabet, of course, does plenty of other things too, but, its mainstay is Google, obviously. And the forward PE is 18.3x. It has an annual dividend there, which a lot of people hold the stock as well, not just for the, the benefit of the stock going up, but also the dividend payout as well. And in the US, I think it's slightly different. Dividends get paid out every quarter.
It depends on the symbol. It depends. Some are monthly, some are quarterly, some are only annually. Yeah, it just depends.
Yeah. So in terms of a company, still very strong revenues there, but it's always not about what the date can deliver you right now if you're dating someone. It's all about what the date can give you tomorrow.
Exactly.
Right, so the outlook at the moment is still strong, but we have seen concerns surrounding that AI and search competition coming from the Perplexities, the Claudes. 39 out of 50 analysts rating Google as a strong buy. So I am thinking controversially that Alphabet might have difficulty when it might see a downside surprise when it comes out with earnings, just because it has a lot of headwinds on the AI side of things. So if I wanted a bearish strategy, and what I'm going to tell you the key levels that I'm looking at.
Yeah.
So we're now around the 190 level, but I kind of think we're just going to have disappointment, and potentially we could see this fall to levels seen 9th of June, so around 180, maybe even 170, that sort of area.
That's where you think it's going to move. Okay, yeah. So with that, I mean that if we want to take a look at the options chart, and I'm also, I didn't preface this, I'm working off of specifically the earnings dates. So because we see this purple line here, that's indicative of the earnings. So we're going to go to July 25th, which is this Friday.
I really love that functionality. Like it just does it for you and tells you where.
Yeah, it's nice. It's like giving you a little heads up.
Yeah.
So if we think this guy is going to drop, we could get a little bit more advanced, sticking with sort of what we did before with the puts. We could go, buy a put spread. So say, hey, we think that this one is going to, rise to 180, or rather fall to 180, such as you mentioned. And then also we can cover ourselves here, just in case, by selling a put option. So this would be a long vertical put spread. And it is long because we are paying, this DB stands for debit. We're buying it for $52, right? What this does is say, hey, if everything plays out the way we want it to, and this guy, say, is in the money, we would be selling at 180, buying at 177.5, which that in and of itself is a profit, but then we factor in the amount we paid for the premium. So that is one way we could go about it. This is the conservative option because, again, we're buying and we're hedged, but there's always, a risk because we have one short leg in here, and say this guy's not there for protection for any reason. But it is what we consider a conservative strategy. So I'm going to remove that leg, remove this leg. And if we want to do the flip side, we could sell a call spread. So we think it's going to go to 180. For that reason, we could sell at 180, and we could buy at 182.5. This would give us a nice little 182 credit if we get filled at that price, right? But if things go against us, we'll see that we could be buying at 182.5, selling at 180, right? That in and of itself is a $250 loss. But if we factor in the premium, we take 250 minus the 182, which would be, haven't had enough coffee this morning. That would be 150 minus 31. Pull up my calculator this morning. That would be 250 minus 182 would leave us at like 30 something loss. But yeah, anyway, that would be the
loss is just to cover you if it goes the other way, right?
Exactly. It's just something to be cognizant of. Your max profit we know is the 182. Oh, here it is. It's 68. I misspoke because we're only going to uphold a margin with the max losses, which is 68. It would be the width of the spread minus the premium, and that's
actually, this opens up a good question. Why is it, Tom and the gang, you don't have an instant calculator? Like the moment you put on, it sort of gives you an instant, example calculator of what your
so we do have that. That would be more so with.
Because like you, I'm not a morning person naturally. I'm actually
no. I mean, clearly I'm not. I actually am. But this would be the curve analysis mode. That would this would. But also, a lot of these numbers are what we're looking for here. Max loss is 68, like I mentioned. Like it does the calculation for you. You just need to know where you're looking for. But this will
show us again how you got to that view, because
Oh yes, trade mode. So we were in table.
Yeah.
So this is where we would pick what we want. You could also go up here to do so. If we want to analyze the position, we would instead go to curve analysis mode. And that pairs up with...
I like the curve analysis.
You can get super in depth with it. So say we wanted to analyze it on the 25th when this one expires, we could do that.
And this is how they have like, you know, the options barbecue, and they take a look at the speedboat trade. Have you seen that one?
No, I haven't.
Frankie Walsh is a real fan of the speedboat trade, where you have your speedboat going through two hills, and there's an imaginary river in the middle.
Oh,
yeah. But thanks for showing that to me. I see. Every day's a school day. I didn't know that there was a button there to show you the curve view.
Yeah. Yeah.
Right. Thank you so much for being with us on
No
Trader
problem.
Tools.
Yes, of course. Thanks for having me.
This is one of my favorite segments, Trader Friends, because, you know, we will replay it for you because Jolie does it so elegantly and so, you know, slowly. Sometimes it's like too fast.
Yeah.
And we need to kind of like dial it down.
Slow it down.
Exactly.
Yeah. Next time I'll drink more coffee.
Jolie's also
haven't
doing
woken up
a money and wine segment, a money and wine segment here.
Sure.
I'd love to. You had me at wine.
Yep. That's
Right.
next.
Thank you so much for watching, but stay with us because we have Joachim Clement next, and we're going to cover quite a few things, including defense stocks and also Costain, and also some stocks that you could look at in case there is a correction in the summer. Because many people are saying, time for the bears to come out.
Oof, time for the bears to come out.
I think they're going to stay in the cage for a bit
Yeah,
longer.
I thought they were hibernating. Right?
Right, on that note, stay there, go and grab a coffee and come right back because we got Joachim Clement up next. Hey Trader Friends, welcome back, and we are joined back by popular demand, Joachim Clement.
You mean two people actually wanted me back?
Actually, loads of people. In fact, we had another mate of mine, long time. I felt so old when I realized that. I'd known John Mayer from SP Angel for 2 decades, I think. And I think his response was, we were 4 back then, weren't we? Oh. So yeah, it's always great having you on. I see, you know, I love how you're consistent. It could be 35 Celsius, Trader Friends, and Joachim will still be in a suit.
Oh, absolutely. I mean, I am one of the few people who still wears ties into the office. As long as I'm in front of a camera, I will wear a suit and tie, no matter what you do.
I love a bit of consistency. Speaking of consistency,
yes.
I know you and Rich are betting that the now slightly consistent grind up taco markets is going to have a correction. Are you reiterating what you said here the last time?
Absolutely. Nothing has changed over the last 2 weeks since I was here last time. In fact, there are some new signs of some exuberance in markets. I love to read Sentix, which is the German weekly sentiment survey that everybody can download for free.
Is that what you read before you go to bed at night?
No, but every Friday they send me an email to ask their views, and then on Monday they send me a nice little note of where things are. And just this Monday, in the latest note, they said that the setup in terms of investor optimism is such that they expect a massive increase in volatility in August. Now, what could possibly happen in August that creates an increase in volatility? Exactly. So I think 2 weeks ago I put my money on the trade war heating up. That promptly got delayed 3 days later. But as they say in Germany, aufgeschoben ist nicht aufgehoben. Just because it's delayed doesn't mean it's over. And I think we are going to go to crunch time when it comes to the tariffs. Whether that's late July, early August, as we now expect, or whether Trump is caving in once more, we don't know. But there's something important to realize. everybody seems to be thinking about the taco trade, obviously, still, and that Trump will chicken out eventually. But the more resilient the stock market becomes and remains, the more it encourages Trump, because Trump has already been in front of cameras saying, oh, the market takes it in its stride, so they're not worried about tariffs anymore, so I can just go ahead.
And in fact, the whole JP tremor that we saw recently, my humble opinion, please tell me, Twitter friends, if I'm wrong or not, Joachim never holds back.
We know each other for not quite 2 decades, but still.
That was just him testing, just Trump testing the market, right?
Yeah.
Let's see what will happen if I wave this bit of paper around and I say that, he's potentially going to see how the market reacts, so that when the time comes, when it happens, they'll have a gauge of how the markets might react.
Yeah, and my money is still on Jay Powell remaining in office until May next year, so he will serve out his term. Well, just because there's not really a reason for him to resign. If he resigns before May, he himself will cause a market upset. And we already see that in the interest rate cuts priced into money market futures, that the market is already expecting Jay Powell to be replaced in May next year by somebody much more dovish, who will be much more likely to cut interest rates. Now, having said that, the chair of the FOMC is just one person. So it's not going to change the entire FOMC. But the signal to the market that the Fed has reduced independence is going to be catastrophic. On Monday, I sent out a note to clients when things were still kind of up in the air whether Trump would move forward, with a study that has been done in November 2024 by some academics of how would the market react if the Fed loses its independence. Now, nobody knows is the correct answer. But what they did is basically say, well, if the Fed loses its independence, they will let inflation run at 4% instead of 2%. And that, they expect, will devalue the dollar by about 15% and increases the risk premium on long-term treasury bonds by about 120 basis points, 1.2 percentage points. And I think that is entirely feasible in the long run. If it comes as a panic, then all bets are off. It might be much, much worse. But to be perfectly honest, in a world where the Fed is no longer independent or even perceived as independent, 5% is a floor for 10-year treasuries, not a ceiling.
Did the report say anything about how much lower the dollar might go? I'm just whacking up the dollar basket for you, trader friends.
As I said, they expect 15% on a trade-weighted basis. So that, on a cable perspective, that might actually get you to 150 for sterling dollar.
It's interesting, isn't it? I mean, we've been seeing all these, what I would call usual suspects that would rock the market, but they haven't, which makes me feel vindicated that the markets have now become completely unhinged from the usual, geopolitics, bunker busters, tweets. It's completely gone cuckoo bananas and unhinged from the usual things that move the markets. And so far, since that April tariff tantrum moment, we have just seen a consistent bump the dip. What I am hearing now more, and I'm going to stretch out my trend line there because it has now started breaking below it. And for a technician, that is interesting. We've been seeing buy the dip, avocado since April. When are we going to see buy the rip?
Oh, that's a good question. And as I said, I put my money on late July, early August as a trigger. The earnings season that has just started in the US is not going to give us any major surprises, except in maybe individual stocks. We've obviously early days. Only 50 out of 500 companies in the S&P 500 have reported. But let me give you an interesting statistic.
Go on then.
50 stocks have reported. 8% is the average beat on the earnings side, so 8% positive surprise. Over the last 8 quarters, in 6 out of those 8 quarters, S&P 500 companies have on average beaten by 8%. No, really. It is one of the most rigged games in this industry. Corporate executives tell analysts the numbers that they should write in their reports, not in so many words, and then analysts make an assumption, and corporate executives beat by 5 to 10%, typically centering around 8%. Nothing is going to be a surprise in this earnings season. It is going to boil down to the macro environment, where we do see some first signs in US inflation picking up, where UK inflation came in hotter than expected, and where I think the leading indicators also point to a slowdown in earnings growth, at least in the US.
And just looking at the chat, lots of people chiming in. SG Can saying Joachim is a star. You see, they're all listening. Talking of ties, Monkey Man saying,
I'll send you my money later.
Is that a Paul Smith? Monkey Man is...
No, that tie is actually from a charity shop.
Oh,
I don't know what it is, no brand.
I love a charity shop because there's so many unloved items that can get, you know, more, another lease of life. However, if my mum's watching the show, she'd be absolutely mortified because in Asia of her generation, it's still like the soul of whoever that person was that last wore it will remain in the article of clothing. And then she'll go to the next question, which is, Angelina, you piss poor. Please tell me. Is the next. Yeah, let's not do that.
Well, let me put it this way.
Monkey Man there used to have a Ferrari, by the way. Is it Ferrari? I think I got that right. Monkey Man was saying, talking about your ties. Back on track now, talking about from ties to Euronext. I'm looking at you to make that bridge.
Yes.
I've been picking Joachim's brains to talk about, you know, despite all this unhinging of the markets, despite the taco madness out there, where can we see pockets of light and opportunity? So let's talk about Euronext.
Euronext, definitely. If you have followed the financials and the bank's earnings in the US these couple of days, you will have seen that the trading revenues have gone up in general and have tended to surprise to the upside. Well, why? Because in the second quarter, we had April and May and all the chaos, and that volatility is obviously great for trading revenues. And so you want to invest in companies that are yet to report their numbers, and Euronext, together with London Stock Exchange Group, report on the 31st of July, and that benefit from that. Now, LSEG, we've talked about that before. I'm still a big fan of it, but LSEG is mostly an AI play, and LSEG Workspace as a competitor to the Bloomberg terminal. The London Stock Exchange is just 17% of revenues. Euronext, 75% of revenues come from primary and secondary market revenues in the stock exchanges there. And that, to me, is a clear-cut case for a positive surprise on the 31st of July because of the higher trading revenue, and because in Europe we're also starting to see a little bit more in terms of equity capital market activity and capital raising activity.
Right. The other interesting thing about this Euronext play is that you know, it seems to be more exposed to the revenue streams that are linked to technology solutions, data sales, managed services, and its key products as well. It's linked to a real growth area, especially in Europe, the ETF and structured product solutions too.
Yes, they are actually quite innovative when it comes to developing indices on thematic trends. So, for example, they have announced that they will provide an ESG index for defense stocks. They were the first ones worldwide in that. And it's this kind of dynamism that you see in Euronext that you don't really see in other stock exchanges that much.
Right, so let's try and have a look here at Euronext and its share price. Let's have a look. It has had a really good move high. This is the daily chart, and very strong upward trend there.
And you see it's at resistance.
Yes.
But as I said, I think we will see a little bit of a dip maybe in the next couple of days in order to kind of get a nice run up for the 31st of July, 1st of August to break through that resistance.
Nice. So a bit of taking off the froth before it continues to move upwards. Nice. Also, in terms of a rating snapshot for you, trader friends, we got outperform from 8 analysts, a hold from 7, and a sell from 3. This is the most recent snapshot from July this month. Now, another one that you like. Big news today. I crunched some numbers as well for this. Do you own any Burberry?
Ties, yes.
I knew he was going to say yes. So he's got more. Actually, that's not hard. I don't really own luxury goods. I don't own luxury stocks, but not goods. But yes, you seem to have quite a bit.
Because you're a weird woman.
I am not weird. I'm
sorry,
pragmatic.
I'm sorry, but you are
It's
a
hot
lady of
today.
Asian heritage. If you don't have any luxury clothing at home, then I am really surprised.
None. Absolutely zero. You can come and check. However, I do have two, well, until recently, I had 2 full-size functioning dishwashers until recently because it got pulled out by my husband because he said it was taking up too much room. I thought it was really practical. Trader friends,
A Jewish household.
taking a look at, but no, I don't like.
Just to have just 2 dishwashers, not two entire kitchens.
I like entertaining. I don't like washing up. Burberry. Enough about Angeline's household. Burberry.
Yes.
Right. Let's have a look at this because we did see it, move quite a bit. It moved a bit higher and then a bit lower. The key things here, which I pointed out this morning, very disappointing on the growth and the demand in Asia Pacific, and also the Americas as well.
You think so?
Yeah.
I would disagree.
Were you kind of like, yeah, this is a buying opportunity?
This is just a confirmation. I mean, the shares are up 27% year to date. It's the best performing luxury stock in Europe. And why? Because it's the stock that if you went into 2025 at the beginning of the year, everybody loved to hate it. It was the most despised stock in the luxury sector. And rightfully so. It was in deep trouble. And the new CEO, which came in about a year ago, has engaged in this turnaround program. And with the first quarter results, we saw some first signs that the turnaround is coming. Now, what we're seeing is, on a global level, minus 1% year-on-year comparable store sales versus minus 3.7% expected. So a slight beat there. And across the regions, in the US and in Europe and in Asia, an improvement of the situation.
Improvement of a negative situation.
You know when you make the most money? When things go from very, very bad to just bad.
Yes, I know that. But my problem with Burberry is that it is at the lower end of the this is not to do with types, of the luxury spectrum.
Yeah.
And also we are seeing still, signs of consumption weakness, inflation is high. And so it's not really servicing the end of the market whereby, if times are bad, it doesn't really matter, right? And also the whole, coming back to, I'm going to get Burberry's share price up. Mm-hmm. Yes, it has done well, but my thing with Burberry is that, look, it's down 1/3% there. And I'm going to show you, trader friends, my daily chart there. Here we are. It has done well, but I am still not convinced that, demand is going to shine in the second half of this year. And I think a lot of that good news comes from extreme cost cutting. I mean, what is it? They've cut some 20%?
And at the same time, they said that now in 2025, their focus remains on investments and rebuilding the brands, rebuilding the supply chains, and focusing on their classic products like trench coats and scarves, etc. So simplifying the entire product offering.
Thank you. Pessa Mali is saying that. I believe Anne. She seems like a sensible.
Yeah, and you're both wrong, but fine.
Also, Jugger coming on saying, I love Jugger. He's German, as you know. Been on our chat for a very long time, saying it needs a German to teach someone to be British. Love your sense of humor. What I would say is, especially for Burberry as well, Hatta Hatta Panzerkatte.
Yeah.
Is one of my favorite things. Like, oh, we could have done better and changed up our design team. Oh, we could have done better and found ahead sooner. I think all this has meant that it's going to actually either come down after it's, you know, now being supported by the 20% workforce cut. And I think it's still going to be difficult in a world where there's going to be high inflation. People are not going to feel that, especially on that end of the market, not so confident of buying, you know, that Burberry you pick up at the airport. Right?
Actually, tourism revenues in Europe were disappointing. It's one of the disappointing things there. But domestic demand, so outside of airports and tourists hubs, was picking up strongly. And that's actually what we see in general. People love to hate European growth and European consumption, but we are seeing a lot of signs that Europe is accelerating. Economic growth in Europe is accelerating. And the company is very honest and saying, look, don't expect any positive kind of developments in terms of year-on-year growth on sales or earnings in 2025. It's all guided towards 2026. So they have bought themselves some time before they might disappoint. And then the other thing is, you know, we just got the biggest tax cut in history for middle class, well, not middle class, but wealthier American households. Yes, they're going to face tariffs, which is going to cut into their budget. But on the one hand, they have to spend more on imported goods, but on the other hand, they also spend less on taxes. So I'm not that worried about consumer demand in this kind of affordable luxury segment in the US or Europe. And everybody knows that Asia is in terrible trouble. So that, in that respect, nothing is new. Indeed, if you look at earnings revisions, luxury companies across the board have seen negative revisions. Mm-hmm. Burberry, no. Because everybody was so pessimistic already that it has found its trough, and we're now starting to see some earnings upgrades.
You know why I also am not so convinced that Burberry's, you know, going to do well in the next half year? Mm-hmm. I've not had, not one question or request from Asia to buy Burberry, to bring it back. I am the Burberry mule and the...
So what are they asking for? Hermes?
They asked for Hermes, they asked for...
Well, Hermes is a perennial outperformer. Oh. It's just the best luxury stock in the world.
They asked for Vuitton, they asked... I know, right? It's crazy. And then I end up carrying this stuff that it's not even for me. Do you believe that Angeline doesn't own any luxury items? Oh, amazing, look at that! 51%!
I will come to your home and check your closet.
But cars don't count as luxury, okay? That's
no, cars is different. We're talking here about clothes, watches, scarves, coats, etc.
Look at what I'm wearing as a watch. It's all like pragmatic, you know.
Yeah, I know that you're very utilitarian when it comes to your tech gadgets. That I know, but we're talking here about clothes.
No clothes. This is like my shoes are M&S's best trainers right now. Grant, Terry, what's your thoughts on Estee Lauder as the world enters a recession later this year? That's a good one. Estee Lauder, very unloved for a very, very long time. This year could it be the lipstick effect be the factor in turning the bearish trend around? Grant, Tyree, have you had coffee? You're typing. Estee Lauder, thoughts?
Thoughts? I don't cover Estee Lauder. I don't follow Estee Lauder, but I do follow L'Oreal and basically similar stock. And I would say Well, there is some softness in macro data in Europe in the second half of this year, but we don't expect the US to go into recession this year. I'm in the camp where I expect the US to go into recession in 2026 as in reaction to tariffs and things like that. But yes, there definitely is a turnaround possible for these cosmetics giants. The lipstick effect is something that is kind of like reported time and time again when you go into recession, but it doesn't really hold up that well if you look at it historically. It is more a situation of, I would say, things getting a little bit better in Europe and in the US, as we just said. What Donald Trump taketh on the left is giving back on the right in form of tax cuts. So
yeah,
I would say solid consumer demand should actually support these cosmetic stocks.
Yeah. Paul and Peter there. Grant, Tyree, thank you so much for your comments there. And good point, Estee Lauder. It looks like there is a bit of a breakout there after a lot of pain on the chart since its highs, heady highs around December 2021. We will have a look at that. I know Piers was looking at Estee, so I'll ask for you. Right, Sam, the like and subscribe button if you want Joachim back with his ties and his stock recommendations.
You can even send a request what brand of tie I should wear.
That is a whole entire show.
Oh my
yeah, another show.
Stocks don't stop going up, or do they? It's Monday, July 21st, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Dylan Radigan in Milan, and Nick Batista in Chicago. Ilya Spivak's out this week, so we'll have a rotating cast of guests here to fill the third spot. Welcome to the show. Thanks for joining us. If you're on the platform, Tasty Trade. If you're on the website, tastylive.com. Come over to YouTube. Tell us what you think of this action. This late day sell-off in stocks, in bonds, it was all working out a little too easy and well this morning when the NASDAQ ripped to a new high. Treasury Secretary Scott Bessent told us that the August 1st deadline doesn't really matter. But the market today is, well, the day where we have low volume, low volatility, positive technical drift. We do poke up to a new fresh all-time high in ES and NQ before a late day sell-off reels things back in. Bonds do settle to the upside after, again, a late day sell-off peels us back from the highs, I should say. Gold and silver hold on to their strength. Silver up a healthy 2% right now, up over $39 once again. Gold likewise potentially breaking out. Nat gas collapses today, and we have a slew of movements in the FX market, which are really grinding my gears. But before we get there, Nick, you're new to the show. Welcome for this week. Talk to me about this market here, my friend. You and I were both playing for the upside. I got out a little bit earlier. You think this thing's going to run still? Why do I have paper hands and you don't?
I don't know if we have the same sort of velocity to the upside that we've seen. I think, I think it's hard just generally to be short into the Mag 7 tech earnings. I just don't see a realm where there's anything to be concerned about with those earnings. And so, I think that a lot of them have had their run up when you look at a Microsoft or Nvidia, obviously, where you've had these just, V bottoms totally to the top, if not beyond previous highs. It feels like, at least for the next couple weeks as we digest these earnings, the downside is kind of capped. And I think the upside is capped a little bit too. And that's why I think I lean inside up on these earnings. And once we get through this earnings, I think the catalysts for more upside become lesser and lesser. And that's when we could see a little bit of weakness. So maybe a couple weeks, that's when we can get some sort of pullback. But I just don't see the markets rolling over with all these big name tech earnings. And I just don't see them coming in, with any sort of surprise.
Dylan, it's another day and another few dollars to the upside while we don't close at the exact highs. Still another 0.5% for the NASDAQ, 23,342. Does this thing still have legs?
Yeah, I mean, I think that it does. I agree with Nick. I think that basically, we kind of took the inflation scare in the beak last week, I guess it was it last week with the CPI or 2 weeks ago, CPI, PPI,
sure,
and sort of dealt with that. And then, the market sort of has no short-term memory. I totally agree with Nick that the earnings are going to drive the sort of short-term action, and that the earnings are going to be great, relatively speaking. I think the economy is remarkably strong. I do think inflation is a real risk, just to put in my 2 cents on Ilya's behalf. So I don't think that inflation is a non-factor, but I do think that that it is not a relevant factor to the price action right now. I think that the earnings momentum is the relevant factor. And I do also think, I joke about the dollar, but I think that the dollar weakness is actually an asset as well, both in terms of some of the export drive on these U.S. multinationals, and then also on sort of the crypto front and all the rest of that. So I mean, obviously we came off of the dollar lows there, but not by much, and it's already kind of started to roll over a little bit. So I just think that between the momentum that the weak dollar provides for things like Bitcoin, combined with the earnings that the weaker dollar drives in terms of the export for some of these big multinationals, and I think that the fact that the inflation numbers are considered to be immaterial at this point, at least for the week or two, is all reasons why equities go higher, crypto goes higher, and having a good idea about why things shouldn't be the way they are is the surest way to lose money.
You guys mentioned these tech earnings. I think providing some context around the earnings picture thus far would be useful. I don't have this information as of today, but coming into this week, we did have, according to FactSet, 12% of the companies in the S&P 500 having reported their actual results for Q2 2025 to date. Of those companies, here's the silver lining. 83% have reported actual EPS above estimates, which is above the 5-year average of 78%. This is where the cloud gets a little bit darker. Companies are reporting earnings that are 7.9% above estimates, which is below the 5-year average of 9.1%. And further to this point, the blended earnings growth rate, which is combining the actual results for companies that have reported and estimated results for companies that have yet to report, that's currently sitting at 5.6%, which it seems good, it's positive. But if 5.6% is the actual growth rate for the quarter, it will mark the lowest earnings growth rate reported by the S&P 500 since Q4 2023. So things are good, maybe decelerating in a certain sense. And this is also Q2. This is the tariff quarter, right? Like April and May. I don't know if the market's going to penalize companies for having some volatility in their Q2 figures, given what was injected into the market, broadly speaking.
Yeah.
Right? But
those stocks don't matter either. It's not the Mag 7s. Come on. I don't care about those other 10, 20, 30 names. It's Apple. It's Microsoft.
Well, these companies are making money. They're making a ton of money right now. Yeah. 83% of the companies that have reported actual revenues above estimates, which is above the 5-year average of 70%. So there's some things to like. There's some things to raise your eyebrow about. Verizon gave us some decent numbers today, which helped get the market going this morning. Dylan, I suppose, in fairness to our fair Soviet friend who is not with us at this time, he's alive still. I just realized how that sounded, which actually... I burn sensitive documents now and again, like old medical bills and whatnot, I don't trust the shredding. And so I described it yesterday to someone as burning trash. And that got a lot. That was like, that's not what I was doing. I was not burning trash in my yard. Okay, I was destroying sensitive documents in my fireplace. So wording matters. Words have meaning. Okay, so in fairness to Ilya, this is what he might say for the bears out there who don't think that I give bears a fair shot. We had a relative local high near 63.55.
Are there any left, by the way? I mean, I'm sorry to cut you off. Are there bears left? Have they survived this?
Ilya claims he's comfortably short, which I don't know what it means. That means at all-time highs. He would say here, which to his credit, right, you had a market that tried to break out above 63.55 or so, immediately rejected and pulled back in, breakout failed. You see this in the NASDAQ as well, where we try to break out to a new swing high, although the NASDAQ doesn't quite give it up. So I would contend with him that this market still looks pretty good after this engulfing bar. Either way, though, it's a low volume, low start to the week. Nick, before we go deeper into other issues, I do want to touch on the earnings that are due out. I flagged a few that I think are interesting in terms of companies with large market caps. Maybe you have a better perspective on this, but for Tuesday, coming up tomorrow, Coca-Cola, Philip Morris, Raytheon, Wednesday, Google, Tesla, IBM, Thursday, Honeywell, Union Pacific, and Blackstone. You've been talking a lot about these tech earnings here, so I'm assuming you're laser focused on Google, Tesla, and to a lesser extent, IBM for their AI products later this week.
Yeah, I mean, I think Google has been kind of my catch-up trade. It's been an absolute pig for the better part of, the rally that we've had and is now kind of catching up. I think there's more upside in a Google/Apple in just the news not being as bad as what has been priced into the stock. So I think there's more upside in those sort of names relative to a Microsoft or an Nvidia, where I think, as you said, they're kind of priced for perfection, or at least it seems like they are, or at least priced for as good a earnings report as you could get. So these are the names I'm looking at. I think Tesla is a goofy one. I mean, it's obviously just moving on, or has been moving back and forth on whatever is happening with Elon. And I think that, the fundamentals of it obviously don't matter. So that one's the one that I have the most uncertainty of. But I think generally playing it to the upside is the asymmetric bet. I mean, that's just how Tesla trades. And that's how I typically trade it, is upside.
Put spreads?
You could sell put spreads. You could do diagonal spreads, even like trading calendar spreads or stuff like that, where you kind of play into the upside call skew that you typically have here. I mean, that's the sort of trade that I play here. But put spreads are definitely the more conservative way to play for it.
I like the tech. I mean, I like being long the tech names going into earnings, honestly. I mean, I guess the tasty trade thing, the tasty trade way would really be obviously to do a condor or something before the earnings and then just let the vol come out. But directionally, I like the put spread as a sort of halfway between a condor and a naked call, I guess.
You bring up Google, if only to wave a flag here a little bit. Dylan, back in April, a little over 3 months ago, we were given an assignment by our editors here on the desk, and we were asked to, what did you like before the market sell-off? What do you still like now, right? And we on April 9th and April 10th talked a little bit about Google and Meta, the clear-eyed case for Meta and Alphabet, given some of their cash flows and the way that their earnings have shaped up. I don't know if we can make that case anymore for Meta. Meta right now has a forward PE ratio of 27. That's very different than the 20.4. It's no longer below the 23.5 5-year average. Google's a different story. Google's forward PE is now north of 19, and that's still below the forward PE ratio of 21.5 over the last few years. So if I'm thinking about this market now and how it's behaving, I mean, Nick, Google would probably be the one company that I feel like has some catch-up still to go, considering it really has not had the year that a Microsoft has had or a Meta has had. And, it didn't have the AI rollout that many people thought it would, and its business model, Google Search, being pressured by all these new chat tools. I'll be honest, I don't ever use Google Search anymore.
Really?
I only use ChatGPT now. And
same for me. GPT is the new Google.
There's no.
It really is. The kids call it prompting. That's what I've been heard. That's what I've been told.
We do call it prompting. I'm still not.
You're part of that, Vecchio. You are.
Yeah.
Okay.
Yeah. 30. Again, my daughter's like, "Oh, you're so old now. I see all this gray." She keeps pointing out gray hairs on me and saying that like you're gonna die. It's like I got it. Right. I don't need that. Don't need that stress. Live. Thank you.
Our new intern has been just dogging me for the last like 2 or 3 weeks about how old I am. He was like, "Man, I thought you guys were like young. Come on, man. Respect your elders here, all right? Don't just straight up call me old."
So you have a Google that's like really like, that was the threat. These GPTs, LLMs are going to displace Google search, but Google's been able to reinvent itself, and it's AI now, as we've looked on Polymarket previously, with the AI analytics platform that we found on Twitter, artificial analysis. They rank Google's AI very, very high right now, Gemini. So it has a nice bit of a pop here going into the earnings, 2.72%. Do you guys kind of feel about Google the way that I feel about silver, which is to say that the other tech names had a big run earlier this year, like gold did, and now it's really these laggards. It's their turn to play catch up. Dylan?
Yeah, I do. I absolutely think that the tech names are set up for a mad dog run. I think that, that everything that's happened in the first half of this year was greatly disruptive to a lot of perspective for very good reasons. But I think that a mad dog run is teeing up here. And I think that kind of right about now is the time. Of all the names, I mean, I still always kind of come back to Meta because I like Meta as an AI play, as well as also a sort of the dominant advertising play. I don't Google as well, but Meta always ends up being kind of my default favorite, as well as I tend to be more comfortable with the Tesla situation, even though it trades based on the abstraction of Elon Musk and the promise of an uncertain future and all those things. But I just think that that's actually sometimes the less information you have, the more valuable something becomes. Like the details of information actually can frequently reduce the value because it becomes so concrete. And so for me, yes, I like the overall situation, but more than that, I really like Meta and Tesla of the Mag 7. I wish I could say I liked Apple because I really do think Apple should be more dominant than they are, but I feel like they've had a hard time kind of really getting into gear in a way that is consequential.
I saw some headline today the flip the sandwich phone is the next big idea for Apple.
I mean, back to 1999, back to the future.
Like Samsung has the, or is it the one of the Google?
Oh, the folding screen. You're saying
the folding screen? Yeah. I mean, if that's the best they got, that's a tough.
I mean, that's a sad state of affairs, in my opinion. If the best they've got is a folding screen.
Apple's still being punished for not having AI. They don't have functional AI.
I was just going to say they should have a dominant. They should be. Siri should have put them in the driver's seat for AI, in my opinion.
Mm-hmm. Skype losing out to Zoom and Siri losing out to ChatGPT are probably two of the bigger fumbles in terms of having lead time within a particular industry, having like a dominant, frontier market position, and then just absolutely losing it through sheer mismanagement and poor decision making. Skype doesn't even exist anymore, which is wild.
Yeah. Didn't they just shut it down like a month ago or something? Was it Microsoft that bought it? Who bought it?
It's so crazy. So LeBron James gets drafted and starts playing, and then Skype premieres. And Skype is now shut down while LeBron James is still playing. Like he outlived that entire service, which is like, I didn't think I'd outlive an internet technology, which is a fun transition because we're going to talk about an internet technology. Do you like buying homes algorithmically? Do you like having a team of human meat bags go in there and fix them up and then sell them to someone else at a profit? Apparently a lot of other people do too. Open Door Technologies, based out of San Francisco, came into this week with a short float of 22%. So there's a retail trader gamma squeeze going on here, led by someone who I actually like and follow on Twitter and have for years, Eric Jackson. He was a guy who called out Carvana a while back before it had its big run up. So he has some accolades. If he's not a kitty, he does certainly make the market purr. Okay, we're not going to go into that direction, Nick, but we are going to say that this feels a lot like GME and AMC from years yonder, January 21. Can you talk through what's happening here? Like what a gamma squeeze is, remind people. This really feels like a topic we haven't had to cover in some time.
Yeah, it's underneath the surface, basically the amount of options that get bought, particularly to the upside, causes a squeeze because there's a shortage of shares, or the shares are hard to borrow, or there's a cost to borrow those shares. And so it's kind of like a cascading event of, the more option flow comes in, which means that, the stock moves higher and the borrow rate relative to the price of the stock gets more expensive, and whoever is short the stock is typically having to buy back those shares. And when you're buying, obviously price goes up. It's kind of a everything upside type flow, and it comes furiously within days, hours, minutes, whatever it is. Today, if you look at open interest or volume on the options, they're astronomical, which is
1.84 billion.
Yeah, is it just, and that's all like changing hands, and, that's not just one side. So, that's obviously just trading back and forth. But yeah, these things, they capture our imagination, and they just it's almost deja vu, right? They're not unique. They happen from time to time, and they're usually short-lived. The GME and AMC have been far longer time horizons, but yeah, it's crazy. It's fun to watch.
Dylan, is this the future? Tariffs on everything? Labor being removed from the country, so there's going to be no supply of homes ever again moving forward. So those who own the homes now, they've won the game of capitalism. Might as well build a service around trading those homes.
No. This is just this chart is nothing more than a specific structural situation in a publicly traded security with a reversal of fortune, with a limited float and a big short interest. It happens from time to time. Everybody takes it straight in the beak, but it's not an indication of anything other than a small float, a short interest, and some good news at the wrong time for the shorts, so they just get face jammed. But it doesn't have anything to do with tariffs or the future of housing or any of that nonsense. It's just an unfortunate situation for the shorts, and a lucky and a lottery day for a handful of party boys that were in there in the right time on the right day.
Well, then, a modest proposal, Mr. Radigan.
Lay it on me, pal.
Here's rocket companies. Let me give you a profile of what just happened with Open Door. Open Door has a float of just short of 640 million shares, and the short float was about 22% coming into this week. Here you have rocket companies with a float of about 143 million shares and short interest of 51%. If Open is a powder keg with its short interest in the 20s, then what's Rocket? Rocket was up 7.5% today. I think other people are sniffing this out too at this juncture. I could make a hell of a technical case for this as well, because we do see a move here off the high. And what's this? You have your breakout, you pull back to the trend line, and we catch our 50 in 1 month, and we now move up to a new high. So clearing out 16. Who's to say this can't go back to 21? If there's going to be, Nick, you've pointed this out to me almost every day for the past 2 weeks. All of the no, that's not the word used. All of the crap is rallying.
Right. Yeah, that's a nicer way to say it, but yes.
Dylan, you say
flying.
Yeah, right. And Dylan, you're saying that this thing's just going to run right now. Why not?
Yeah, no, I like this. You have my attention. I don't know as much about the situation as you do, but the situation you're describing in the context of the other situation is awfully appealing. I've been interested in sort of how you structure this.
If we're going into if a retail frenzy, as social media and, meme stocks, as it were, as it's now been dubbed. I will disagree. I think these are smart market participants who are seeking out and profiting from inefficiencies in the market. And while a lot of people could get run over if they join late, the folks who caught this early are obviously feeling pretty good about themselves today. So tip of the hat to them. Yeah. But Open Door really is the first one to get the attention right now. So maybe it spills over into some other things. I'm going to take a flyer tomorrow morning.
It's also Open Door is was a sub-billion-dollar company. Rocket is a much bigger company, so it's a lot harder.
It is.
I get that you can definitely see that sympathy type move, but we're not. GME was moved when it was a $1 billion company or less. Sub-billion dollar was when it started.
Yeah, like 800, I think, million market cap.
It was something around that. It's now a $10 billion company, which is obviously quite the valuation for it. But Rocket being at a $30 billion company, it's hard to move $30 billion to $100 billion unless you're Palantir.
The problem with that, is it also, I just don't know how much depth there is. I don't know how deep into something like this you can really go, just because of the float being what it is,
Mm-hmm.
Because you're going to want to get extremely deep, but I just don't know if it's going to be available.
Oh, not extremely deep, like long the 17, short the 18 call spread. Maybe not at 25 days, but that's like a 4-to-1 reward to risk, right? Looking for another $2 it went up $1 today. Looking for another $2 here. You're talking in the neighborhood of 12.5%, which again, sympathy trades. This is not like this is not a way that we reliably make money around here on overtime, Dylan. But with that madman ethos, if we're at the part of the cycle, where we were in 2021, think about the timing of this. We get the retail meme stock, all of the, Nick, as you said, direct quote, shit flying, end quote. The market then tops out later that year, right? When the companies that really don't make any money and have no substantial reason to be rallying or going up.
It all goes hand in hand. You got markets are at highs, so everything looks expensive. Volatility is near the lower end of where it's been trading. People look for this sort of stuff. You're looking for something that's moving a lot, that's cheap, that is moving. That's it. That has some volatility. And that's usually, when my interest gets peaked to be, playing a little bit of downside in the market as a whole when you have this sort of stuff. And we've had multiple of them over the last couple months. We've had, the quantum computing stocks. We have the, treasury companies now. We have the, the healthcare stocks are kind of the other direction, but it's been kind of we're getting to the point where it's just goofiness in the markets. And that's usually when I get a little cautious.
Yeah, yes. It feels like it's a good time to start getting some powder dry. The seasonal tendency for August for volatility, at least, at NASDAQ, the S&P 500 may chop around in August, but volatility starts to expand and historically spans a lot between August and September. And it just feels like everything, Dylan, everything right now is, I don't want to say price for perfection, but nothing's really dragging us down. It feels like a market that if something legitimate does happen, where a lot of people are going to be caught flat-footed. So getting a little bit more defensive here, particularly if you're planning on stepping back from trading. This is also on my mind. I'm taking off the last week of August around Jackson Hole. And so do I want to have to be on vacation worrying about significant risk in the book? I want to be delta neutral, if not slightly short during that window. For my trading book, I'll keep obviously my long-term holdings. Those don't get touched. We accumulate there. But for the trading side of things, I think right now I have short deltas on in stocks in the tastylive follow account, just plainly. I'm long a put spread in ES now, which I guess is the best part of today. Dylan, we were talking last week about expecting one more little squeeze to the upside. It worked out pretty well. I was able to get out of the market at 23,410 today in a zero DTE NASDAQ call spread, 23,350, 23,500, and then the market keeled over about 20 minutes later. and that would have expired worthless. So I'm very content with how that let's be like Icarus and try to fly as close to the sun before our wings melt. Maybe they started melting today, but I'm free and clear. I got my parachute on. I'm coming back down to earth. And it just feels like it's a prudent thing for most people. This is not the time to get levered up when volatility is really low, when you have IVRs under 10 and NQ and ES, Nick. That's not what the data suggests.
Yeah, I agree.
Okay, let's talk bonds. Let's go over to rates a little bit here. We're at the halfway portion of the show. We do need to talk something related to the Fed, even if Ilya's not here, Dylan, because Fed Chair Powell is speaking tomorrow. I guess there's a caveat to that because Powell and Bowman, one of the Fed governors who will also be speaking tomorrow, are currently in the Fed's communication blackout window, whereby if they do speak to the public in a professional capacity, they're not explicitly allowed to discuss monetary policy or things even related to monetary policy. So Powell can't say, oh, yeah, I think inflation's heading in the right direction. And thank goodness the unemployment rate is going up because low inflation and high unemployment could lead us into certain outcomes. He's not going to talk like that. He never does. So I don't think we should be paying much attention to Powell's speech tomorrow. That said here, though, Dylan, I couldn't help but notice that when Besant mentions that no tariffs may be coming on August 1st, the long end of the Treasury curve gets its lift. Is that the entire game for us right now as bond traders, this on again, off again?
Yeah, well, because the bond market is just pricing inflation at this point. The bond market is pricing inflation, and it's pricing, time to rate cuts. And so as long as the more tariffs there are, the more inflation there is, and the longer the time is to rate cuts, and the less tariffs there are, the less inflation there is, and the less time there is to rate cuts. And so the tariff thing is really the lever that controls the bond market right now, although the bond market also controls tariffs, because when the tariffs become out of whack with whatever the bond market deems tolerable, you can see what the chart does when it jacks up as it did in April and all the rest of it. And so there's sort of this two-step going on between the political piece of the economy and the president and the Trump administration and the tariff talk, and then the bond market's calibration of whatever their perception of the realistic probability of that action actually is, and its implications for inflation and timing to rate cuts. I tend to be, as you know, somebody who looks at any sort of tariff-driven sell-offs, whether it's in stocks or bonds, as a buying opportunity, because I tend to be pretty confident that we're not going to see material tariffs, that tariffs will end up being some version of 5 to 10% reciprocal in most places. It'll be modestly inflationary, but that anything sort of above and beyond that, with probably a few exceptions, maybe American steel and stuff like that. I just think that the numbers are going to be actually pretty benign relative to expectations. And so when you get a sell-off, wherever it may be, that sell-off tends to be an opportunity, not a liability.
Opportunity, not a liability. Nick, have you had better luck than I have in bonds recently? I suppose it's been okay, but my directional shots to the upside haven't worked. It's only been the neutral trading strategy, short iron condors, that have given me anything worth writing home about.
Yeah, I've been sitting here. I'm long around like the 112 handle. So, I've been playing for bonds to go up, rates come down. It obviously has not worked over the last 2 weeks, but this is a nice little move higher. I think trading in a range and playing with iron condors or strangles, if you can hold that sort of position, is kind of where you're at. I don't think rates are going anywhere significant. I don't think there's a big change in rates on the horizon anytime soon.
No, and the market's been pricing in a reduced probability of that coming into this week. We see that Fed cut odds for both July and September are now at cycle lows. So I don't think that's going to be much of an issue here. No one's going to talk about it. No one's going to complain about the fact that rate cuts aren't coming, because rate cuts are medicine, right?
I know one guy that's going to complain about them not coming.
Won't be me. No, rate cuts are a good thing for the stock market. Things are moving up. Right, Dylan? Hasn't that been the mantra for the past few years around here? We don't need rate cuts. Stocks are at highs. Good
I
news
know,
is
but
good
we
news.
have this new situation where there's one particular individual that my friend Nicholas has just referred to, who believes that he has a very specific vision of where rates need to be, and the longer the rates don't go to that location, the more boisterous that individual is likely to become. Although I do think that the bond market is more powerful than that individual, and I think that the people around that individual are pretty. Even when that individual floated the termination of the Fed chief in recent days, it lasted, I think, an hour and a half or something before it was tabled.
Less than that. I think it was like 30 minutes. That
30
sell-off
minutes.
was maybe
Yeah.
30 minutes before somebody came on and said, no, that was just a thought.
Well, they got the preview of it, right? That little hour or so window.
Yeah.
You had stocks down, bonds down, dollar down, gold up. And it was just like flashes of early April across our screens again. And that's the reality. Powell gets fired. Gold's at $4,000, right? I mean, I hope so. I don't own nearly enough gold. Powell's getting fired. My goodness. But rates here are a stick in the mud. I do want to go over to the world of currency because, Dylan, you made a bodacious claim before that the dollar is going to make us all rich. I feel 11% poorer on the year thanks to the dollar's performance, but perk up my spirits. Why is today's price action make you nonplussed?
Me?
Yeah, you're Dylan.
My comment is not a reaction to today's price action. I continue just to hold. I mean, look at that chart, bro. I mean, look at the last 6 months. And so I just think that the absence of an alternative in general and the severity of the sell-off give me more confidence in that little sort of uptick sequence you're seeing in the days before the last three candles there than these three candles offer us. And so I just think that based on price extreme alone, that the asymmetrical probability, to use my friend Nick's phrase earlier today, is still dollar positive more than it is dollar negative. But it's not, has nothing to do with today's price action.
Okay. Nick, do you have any currency exposure going on?
I do. For the last couple of weeks, I've been getting long the dollar in various ways. So I am in total agreement with everything Dylan said. It hasn't been a fun trade to be in, but I am nonetheless in it. I got some call spreads in the euro here. I put some on today. I'm long a couple of different currencies, or I'm long the dollar against a couple different currencies in my tastyfx platform. I am short the Aussie dollar against the US dollar. I'm short. I'm long against the franc. I'm long against the shekels. So I got a couple different positions that have not been fruitful for me. But I agree with Dylan. I think and at some point I feel like that's going to come into play for the big man. You can't have the dollar continue to be weaker, purchasing power being weaker. I feel like that's a bad story. I feel like that story is going to have to be talked about. Real returns with, against stocks is basically zero. So,
well, yeah, right. If you're a foreign investor right now and you've been investing in the U.S., you are negative year to date still.
So that's a story.
That is something to consider. Yeah, dollar Swiss today. Interesting move here to the downside. Not a huge move, but many of these currencies are trying to cross a threshold where the dollar previously, was living, and it doesn't look like we're able to get through there right now. I point that out for the British pound, for example, which we are trying to get back above the uptrend that we have from the January, the April swing lows here. We run into the backside of that, plus the 1 month moving average today and stall. You can see that in the euro, where we've actually already overtaken a former swing level. We fell below it last week, and we're now back above the 1 week and the 1 month, coupled with the earlier year-to-date high in April. That's not looking fantastic. The yen here, this is the real sand in my gears today. I had great day otherwise trading. The yen decided to bounce because the Japanese elections weren't as bad as the market feared. Bad being that the current ruling LDP party with its coalition partner Komeito doesn't want to roll back the consumption tax because they already run gigantic deficits and debt to GDP ratio in Japan is near 250%. And so with these other parties making inroads, the odds that this consumption tax would be axed completely, we have to unroll that a little bit here because LDP and Komeito, they lose the upper house, but they still, okay, the prime minister is still going to stay in his job. So we're off of those extremes. What does that mean to anyone here? I don't know, Nick. What I do care about is the fact that this is a politically driven bounce to the upside. And it doesn't change the fact that regardless of these election results, the reasons why I was short the yen still persist. Because we take a look at the CFTC COT report and the Z-score for yen positioning held by speculators, rolling 20-year basis, still north of 2. It's an extremely crowded trade right now still. So I'm going to continue to lean long the yen. One day does not make a trend, Dylan. I think that the dollar has a chance here still. And so I'm going to keep pushing on with that. The 0067, 0068 call spread. I know that's a place where people were shifting. As we've been discussing here on Overtime, I think going even further out of the money is a lot more fun because we have more convexity. And if the dollar is really going to rebound, the two prime places would be the currencies that have suffered with their own higher yields, the British pound and the Japanese yen. So my heart's still in this trade. This is the blemish on my blotter for today's session. And there is a rational explanation for why it turned out the way that it did. Fade the rally is basically what I'm saying.
Fade the rallies in
6J, 6B, 6J, and 6B. British pound, Japanese yen. Dylan, we've been metals people for a long time. Nick, we haven't heard you opine on this in a little bit. Quietly, gold is putting in one of its highest closes ever today. This is the 1, 2, 3, 4, 5, 6th, 7th highest close just by eyeballing it right now. What's your take on this metals market? There's no longer the volatility that we had in here the last time we sniffed 3,400 an ounce.
Need to be long assets. I think that's the sentiment across the board. I mean, I think the move today is helped by the move in bonds, obviously. But I think in general, it's just, you see the movement in Bitcoin and you say, you know what, maybe there's something of a catch-up trade in gold there. I just think it's, risk on, just trying to buy assets. I guess gold's not really a risk on asset, but I think it's own assets is the fact here.
But I just wonder, do you think that the own assets move if you're a dollar bull, do you have to be cautious on gold and silver and Bitcoin and all those sort of dollar alternative things? Or can the dollar rally and you can still have the metal strong, crypto strong?
It's a good question. It's a good question. I don't know. I think it's it's an interesting point. I think it's just kind of a own everything. I mean, we've watched everything go higher. So
it's just a risk-on party boy party.
Exactly. And I think this
Don't
was
overthink
kind of this was stuck in the mud for the last,
months.
2-3 months, and it's having its moment. I think it's just a risk-on catch-up.
I mean, if we're going to flood the system with more stimulus, I know it's unpopular. We are, right? But I know it's a weird way to conceptualize it, but what's a government deficit? Government deficit is a private sector surplus. And where is all the money going right now? The bottom 80% are getting a tax hike as a result of the Trump tax legislation. The top 20% are getting a tax cut. Where do wealthier individuals put their money? Do they spend it more on knickknacks and blue jeans? Or do they save it? They're more likely to save. They have a higher propensity to save at the margin than lower income or middle income people. And when they save, do they just put it in the bank? No, they have a required rate of return, so they're not just going to clip CDs. They're probably going to put it into the market or real estate. They got to make it rain somewhere, and they're just not going to get the return they want in their savings account. So the tax cuts that are going to the top 20% probably flow back into assets, Dylan, which I think has been a consistent point of view of ours around here. And I think the price action is just vindicating it. So even if we have a pullback in the equity market, like give me a 5% down move over the span of 2 or 3 weeks, get a lot of people scared, absolutely got to buy that dip. Given this backdrop of just liquidity and more deficit spending and a Fed that may cut, and let's just say the Fed cuts with all this deficit spending. What happened to stocks the last few years? They went up. We don't need to overthink that for now. Nick, let's go in a direction where you'd like to go after this, but I know, Dylan, yes. I want you to go out the door here because you have another engagement that you got to get out for. Give us a final closing word before you flip off and head off.
I just think don't overthink. I think it's a risk-on world. You got the earnings. I think that that overthinking it is where money goes to die.
Well said, Dylan. We'll see you tomorrow back here on Overtime. Thank you very much for coming here today. Folks, we'll see Dylan tomorrow. Nick, it's just you and me the rest of the way here as we wind up this show. Our very friendly friend here has another engagement at 5. He's very busy these days.
He's a popular guy. He's great on air. So, we can't keep him all to ourselves.
That wouldn't be fair of us.
No.
Nick, let's go in a direction. What do you want to talk about here as we wind things up? I have a few other thoughts in my mind, but do we really want to talk about oil, right? Okay.
Hey, oil's been a great trade. I'm trading any sort of out of the money premium over the last, really since obviously the 12-day war that ended, but for the last couple months has been a good trade. Mostly for the year. I mean, you had their face ripper when we were in our little war, but other than that, it's been a nice vol contracting theta decay trade. It's not very sexy. I get it. But I give it its dues, Chris.
I asked Tom this often enough when volatility is this low. Do you see the 19.6 IBR in oil as still worthy with engaging? I know it's not 100 anymore like it was a few weeks ago, but it's still better than ES or NQ.
Yeah, I think there's still meat on that bone. I mean, obviously with anything, size is important, but I think to have just something a little bit more diversified from the rest of your trading, oil is something that, you should have some positions on. Whether, with the low volatility, if you just want to play one-sided here or just sell a put spread, just sell a call spread, as opposed to playing both sides and avoid some of the volatility one way, I respect that, but I still think it's tradable here.
I talk about this all the time. I'm writing this down actually right now. I got to share this on Twitter. Oil study. Okay, it's written down. I read this study so many times in recent years, and I'm sure the authors have updated it again. I got it through one of these CFA emails that I have, but it was like, how do you predict oil prices in the market? And the data shows that if you're going to make a bet on where oil prices are going to be at any point within now and 364 days from now, you bet on the current price. You're more likely than not to be correct. Once you go past a year, you can start to look to the futures market, and the futures price is actually a pretty good forward indicator. But don't look to the futures market, right? I would never go to the trade tab here and say, like, where do I think oil is going to be, in November? Okay, 63.83. That's where oil is going to be. I mean, maybe, but I would rather bet on it being at $65.73, given the preponderance of history. So, according to that point of view, I've been doing directional neutral things in oil again post the 12-day war, and it's worked out just fine. Volatility's come in, the market's been pinned about $2 higher, so it's not the end of the world. It's not stocks, but it's working, and if it's not broken, don't fix it. I know that's not really fun to say. I'm looking at the trade ideas here, right? We want to play something like Out of the Money, Madman, and Rocket. This is not one of those. This is a very like workman's type of trade, risking 4 to make 1, 65%. Like you just do this, 45 in, 21 out.
The bread and butter, baby.
It's a great phrasing. Bread and butter
sell an iron condor with, you want to go 58 days out. I'm fine with that. Do a 1 or 2 point wide iron condor. You wrap around the 60 to 70 handle. it trades at 1/3 the width of strikes. It's a pretty cookie cutter trade. That's kind of been where the trade has been. We've bounced between 60 and 70 for the better part of 6 months ish, pretty much the whole year. Besides our one explosion to the upside, I think that's just how you do it in oil.
We need to talk about what's going on in natural gas. Sure. Is there a chance that you're doing anything in natural gas that's not as nerve-wracking as what I'm doing?
I do not currently have a position in Natty Gas. I actually played it to the long side, I believe was my last trade in there with Mr. Westwater. So we were selling put like at the money put spreads. I took them off early in July 2nd on the 14th, but I avoided some pain today. What is happening there?
I think it's just the fact that the weather forecasts for the area, they're just not cold enough for the Northeast. I mean, the new NOAA forecasts for the week ahead have a gigantic heat dome over the middle portion of the country, but by population, it's not like the heat dome that we saw earlier in June. So this demand for natural gas might not tick up from here. I'm directionally neutral now. I got out short last week at the low on July 9th. And so when it rallied back, it felt like a slap across the face. So I'm a little less bothered by getting out, but I did switch to directionally neutral. And so this movement isn't exactly crazy for me here. Where are we? NQ. Do we move out into the next? Where are we over here? NGU5. Yeah. Okay, so 36 days to expiration, 2934243. I can hold on to that for a little while. But the volatility is what draws me in because it's a 45.9, and we just don't see that much of anywhere else right now in this market.
Mm-hmm.
Do you have any tips for trading natural gas? Because I think this is an animal where we like to joke about it being a honey badger, but it's really not like other futures products.
Yeah, my tip for trading Natty Gas is just don't trade Natty Gas. It's one of those underlyings that has just it's always had my number. I've never been directionally correct. Anytime I'm short premium, I'm getting my face ripped off. It's just one of those that is really, really hard to trade. And there's all sorts of seasonality to it and, roles of the different futures because you have the Widowmaker spread, there's contango and backwardation at different times. It's just one of those, I feel like you gotta be a Natty Gas trader to trade Natty Gas.
Got to be a Natty Gas trader to trade Natty Gas. Yeah.
you don't have to be a bond trader to trade bonds. You can kind of,
yes.
You know what I'm saying? Or stocks. You don't have to look at, you can sell put spreads and not have to know everything about the stock. Natty Gas, you kind of got to do some digging, and that, it's tough.
It's tough. Okay. Let's end this on crypto. Bitcoin here pulls back in today. By my little eye, I spy the fact that this is now 2 days in a row where we've closed below our 1 week moving average. I would also note that the low from Thursday, 17,720, is eclipsed on Friday. Friday produces a bearish outside engulfing bar at what would have been a new all-time closing high. That's raising my eyebrow here. The pullback today, fade intraday, raises my eyebrow here. I think you and I are in a similar boat where in recent weeks and months we've been looking at IBIT calls. Those here, I'm still sitting long the 75 short 85 with with 60 days to go to expiration on the follow account. Mm-hmm. But you mentioned that some of your crypto positions in the short term at least are getting a little big.
Yeah.
I want to separate this into two quick thoughts. And actually, I think the more important one is less the market commentary and more about the position management. You have trades that are going really well for you. You've allocated 1, 2, 3, 4% of your portfolio to them, and now they're 5, 10, 15%. And you obviously don't want to have that much risk into one position. So what do you do? Because you obviously don't want to get out of a trade that's working well, but you're now carrying something that you weren't expecting. How do you balance that out?
I mean, it's the hardest thing to do. The wins are never big enough, and the losses are always too big. You know,
Right.
like that's always how it is. You look at it and you're like, well, it could keep going. You know, it can get even bigger. And then when you're losing, you're like, you know, why didn't I just do one contract or two contracts or 5 contracts instead of 10 or 20 or whatever? So, you know, the trimming is always tough to do, but I think it's prudent. And we had, you know, Mondays we have Ryan on for Option Trading Concepts Live, and he has been trading on the follow page through some of the crypto moves that we've had. And obviously he's not top ticking everything, but, you know, he's been kind of lightening up, and it's okay to take some chips off the table and lighten positions up. And I think that is my sentiment here. I mean, I was hoping to see volatility expand a little bit into this Bitcoin move. It has not expanded in the same fashion that it has in the past of, you know, 10K bar and volatility explodes to 70, 80, 90%. We got the 10K bar and volatility went from 45% to 55%. You know, it's a nice vol pop, but it's not the explosion in volatility. So, you know, I think it tells you that this isn't like a, you know, everybody rushing to buy type move. So I think you take a couple chips off the table. Don't have to, you know, I'm not bearish on this stuff on a longer time horizon, but, you know, I'd love to buy a little dip here. And ETH is the same way. I mean, you look at this chart and how do you not, you know, if you've been sitting here waiting for this move and you finally got it, how do you not take some of the chips off the table?
Right. I mean, if you got in near the April lows, you've doubled your money.
Yes.
Right. And so how do you justify? I mean, it's up 5.71% today, but maybe an island reversal coming together, right? We gap open higher, and then we actually don't trade green during the actual session. We do close to the downside. There's some writing on the wall. I know that MicroStrategy is back in the world buying more crypto. I think they just announced
another treasury or like a sale of more. You know, they have those 2 other stocks that they launched that are basically just more liquidity.
Yeah.
DJT
something. Today as well. We saw that they announced, I think, a $2 billion purchase of Bitcoin. Not sure when that was actually made, but that was the headline. And so the stock was up. Did come back in a little bit. But you're seeing these companies that, you know, they have exposure directly, indirectly, taking it on their treasury. They're having quite the run. And now we're having the things like Open Door. Maybe Rocket go next. Yeah. In any event, Nick, we're done here today. We'll be back tomorrow, same time, same place. Overtime's 4 p.m. Eastern, 3 Central, always after first call, Monday through Thursdays at least. So for Nick Batista, I've been Chris Vecchio. Good luck trading. After this, a brief break. More Tasty Live coming up after this. Stocks don't stop going up, or do they? It's Monday, July 21st, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Dylan Radigan in Milan, and Nick Batista in Chicago. Ilya Spivak's out this week, so we'll have a rotating cast of guests here to fill the third spot. Welcome to the show. Thanks for joining us. If you're on the platform, Tasty Trade. If you're on the website, tastylive.com. Come over to YouTube. Tell us what you think of this action. This late day sell-off in stocks, in bonds, it was all working out a little too easy and well this morning when the NASDAQ ripped to a new high. Treasury Secretary Scott Bessent told us that the August 1st deadline doesn't really matter. But the market today is, well, the day where we have low volume, low volatility, positive technical drift. We do poke up to a new fresh all-time high in ES and NQ before a late day sell-off reels things back in. Bonds do settle to the upside after, again, a late day sell-off peels us back from the highs, I should say. Gold and silver hold on to their strength. Silver up a healthy 2% right now, up over $39 once again. Gold likewise potentially breaking out. Nat gas collapses today, and we have a slew of movements in the FX market, which are really grinding my gears. But before we get there, Nick, you're new to the show. Welcome for this week. Talk to me about this market here, my friend. You and I were both playing for the upside. I got out a little bit earlier. You think this thing's going to run still? Why do I have paper hands and you don't?
I don't know if we have the same sort of velocity to the upside that we've seen. I think, I think it's hard just generally to be short into the Mag 7 tech earnings. I just don't see a realm where there's anything to be concerned about with those earnings. And so, I think that a lot of them have had their run up when you look at a Microsoft or Nvidia, obviously, where you've had these just, V bottoms totally to the top, if not beyond previous highs. It feels like, at least for the next couple weeks as we digest these earnings, the downside is kind of capped. And I think the upside is capped a little bit too. And that's why I think I lean inside up on these earnings. And once we get through this earnings, I think the catalysts for more upside become lesser and lesser. And that's when we could see a little bit of weakness. So maybe a couple weeks, that's when we can get some sort of pullback. But I just don't see the markets rolling over with all these big name tech earnings. And I just don't see them coming in, with any sort of surprise.
Dylan, it's another day and another few dollars to the upside while we don't close at the exact highs. Still another 0.5% for the NASDAQ, 23,342. Does this thing still have legs?
Yeah, I mean, I think that it does. I agree with Nick. I think that basically, we kind of took the inflation scare in the beak last week, I guess it was it last week with the CPI or 2 weeks ago, CPI, PPI,
sure,
and sort of dealt with that. And then, the market sort of has no short-term memory. I totally agree with Nick that the earnings are going to drive the sort of short-term action and that the earnings are going to be great, relatively speaking. I think the economy is remarkably strong. I do think inflation is a real risk, just to put in my 2 cents on Ilya's behalf. So I don't think that inflation is a non-factor, but I do think that that it is not a relevant factor to the price action right now. I think that the earnings momentum is the relevant factor. And I do also think, I joke about the dollar, but I think that the dollar weakness is actually an asset as well, both in terms of some of the export drive on these U.S. multinationals, and then also on, sort of the crypto front and all the rest of that. So, I mean, obviously we came off of the dollar lows there, but not by much, and it's already kind of started to roll over a little bit. So I just think that between the momentum that the weak dollar provides for things like Bitcoin, combined with the earnings that the weaker dollar drives in terms of the export for some of these big multinationals, and I think that the fact that the inflation numbers are considered to be immaterial at this point, at least for the week or two, is all reasons why equities go higher, crypto goes higher, and having a good idea about why things shouldn't be the way they are is the surest way to lose money.
You guys mentioned these tech earnings. I think providing some context around the earnings picture thus far would be useful. I don't have this information as of today, but coming into this week, we did have, according to FactSet, 12% of the companies in the S&P 500 having reported their actual results for Q2 2025 to date. Of those companies, here's the silver lining. 83% have reported actual EPS above estimates, which is above the 5-year average of 78%. This is where the cloud gets a little bit darker. Companies are reporting earnings that are 7.9% above estimates, which is below the 5-year average of 9.1%. And further to this point, the blended earnings growth rate, which is combining the actual results for companies that have reported and estimated results for companies that have yet to report, that's currently sitting at 5.6%, which it seems good, it's positive. But if 5.6% is the actual growth rate for the quarter, it will mark the lowest earnings growth rate reported by the S&P 500 since Q4 2023. So things are good, maybe decelerating in a certain sense. And this is also Q2. This is the tariff quarter, right? Like April and May. I don't know if the market's going to penalize companies for having some volatility in their Q2 figures, given what was injected into the market, broadly speaking.
Yeah.
Right? But
those stocks don't matter either. It's not the Mag 7s. Come on. I don't care about those other 10, 20, 30 names. It's the It's Apple. It's Microsoft.
Well, these companies are making money. They're making a ton of money right now. 83% of the companies that have reported actual revenues above estimates, which is above the 5-year average of 70%. So there's some things to like. There's some things to raise your eyebrow about. Verizon gave us some decent numbers today, which helped get the market going this morning. Dylan, I suppose, in fairness to our fair Soviet friend who is not with us at this time, he's alive still. I just realized how that sounded, which actually... I burn sensitive documents now and again, like old medical bills and whatnot, I don't trust the shredding. And so I described it yesterday to someone as burning trash. And that got a lot. That was like, that's not what I was doing. I was not burning trash in my yard. Okay. I was destroying sensitive documents in my fireplace. So wording matters. Words have meaning. Okay. So in fairness to Ilya, this is what he might say for the bears out there who don't think that I give bears a fair shot. We had a relative local high near 63.55.
Are there any left, by the way? I mean, I'm sorry to cut you off. Are there bears left? Have they survived this?
Ilya claims he's comfortably short, which I don't know what it means. That means at all-time highs. He would say here, which to his credit, right, you had a market that tried to break out above 63.55 or so, immediately rejected and pulled back in. Breakout failed. You see this in the NASDAQ as well, where we try to break out to a new swing high, although the NASDAQ doesn't quite give it up. So I would contend with him that this market still looks pretty good after this engulfing bar. Either way, though, it's a low volume, low start to the week. Nick, before we go deeper into other issues, I do want to touch on the earnings that are due out. I flagged a few that I think are interesting in terms of companies with large market caps. Maybe you have a better perspective on this, but for Tuesday, coming up tomorrow, Coca-Cola, Philip Morris, Raytheon, Wednesday, Google, Tesla, IBM, Thursday, Honeywell, Union Pacific, and Blackstone. You've been talking a lot about these tech earnings here, so I'm assuming you're laser focused on Google, Tesla, and to a lesser extent, IBM for their AI products later this week.
Yeah, I mean, I think Google has been kind of my catch-up trade. It's been an absolute pig for the better part of, the rally that we've had and is now kind of catching up. I think there's more